All right, let's unmute that microphone. Good morning, everybody. Morning, Gary, Ron, Jonathan. It's good to see you guys. How's everyone doing today? A lot of chit chat in this room this morning, right? I love it. Claire, you'll be glad to know that I'm up and running on YouTube. I got it. Thanks, Gary. um, Sophia, good morning. It's good to see you guys. I don't know about you. This has been a fun week, hasn't it? Um, Does it feel like to anyone else that we're starting to jump into things, kind of going next level, maybe getting those answers that you've been wondering? Guys, I've got to tell you, and it's so important that you understand this. This class has really progressed and it's moved forward, and the content has changed. Thanks 100% to you guys. Those of you that are asking questions are really directing the class. Those of you that have those things that have been nagging in the back of your brain, and you're like, man, I wish you would cover this. All you have to do is ask, right? All you have to do is say, hey, Mark, will you cover this? Hey, CJ, and I will. I promise. Not afraid to stay late. Not afraid to get off of the path that I'm on. Guys, your class participation is one of the absolute biggest tools that you have towards your success. Take advantage of the room, and I want to, in the spirit of that, I've got a list, guys. If you're working with a salesman, if you're on demo, I know who you are, and I know that you're in here, and I want to put an invitation out to you. I want you to just type in the room, go, hey, Mark, or I want you to take a picture of your screen and write test on it. And I want you to go ahead and just say, you know what, the shadows are cool, but I want to be out here. I want to learn. I want to understand what I'm looking at, and I want to make sure that I have clarity. So I should really do these in alphabetical, but I'm not. So Cornelio, if there's anything that I can do for you, don't hesitate. All you have to do is say, hey, Mark, let's talk about it. Spoonie, same thing. If there's anything that I can do for you, raise your hand, ask a question. Doesn't even have to be about taking a trade. It can be about opening your software. It doesn't matter. I'm here for you guys. And that's really what the class is, guys. This is your class. It's not a 3-hour lecture. But I do take direction a little bit, and that direction that I go each and every morning is I like to come over to forexfactory.com, and I'm just checking news. I'm making sure that there's not a bunch of yahoos ready to make an emotional response to something that revolves around the GDP, you know? I don't know what the GDP is, but I know that there's a red box next to it, which means that it can have a high impact on the market. It means that people may act a little crazy, make things happen. Unemployment claims, I know what those are, right? But I don't know how people are going to react to it. So when I see these news releases, it gives me an opportunity to just kind of sit on the sidelines to say, you know what? I'm going to refill my coffee. I'm going to go toast a bagel. I'm going to let these guys work it out. And then when they're done working it out, then I'll be good. Oh, I know, Gary. I lied for effect there. In my head, I see GDQ, and that's just go to Dairy Queen. It doesn't matter to me. I'm more concerned about whether or not it's high impact, you know? And guys, you can, if you are interested in what it means, you can open the detail. I go through these and I look at them. But guys, I think that the point that I was making there is it just doesn't matter, right? If you know that the market may act erratically, well, then now you have your heads up. Jump on the sidelines for a second. At 10:30 a.m. today, we're going to have natural gas storage. At 11 a.m., we're going to have crude oil inventories. Because of the holiday, crude oil inventories was moved back one day. Guys, if you've ever watched crude oil, when those inventories come out, it can go a little crazy, right? It can knock you out of a position. It can spike. It can jump. It can loop. It can do all those crazy things. So write down on a piece of paper, 11 a.m., crude oil inventories if you're trading crude oil, and then go make a sandwich. Good stuff. Guys, everything that I talk about, new users, old users, it comes from the education page. And from the education page, guys, there is the software user guide. If you have any questions about NinjaTrader, I want you to go through that software user guide. That's where most of your answers are going to lie. You're always welcome to ask the question in class, and I'll do my best to answer. And then, guys, sometimes in class, you're going to ask me a question, and I'm going to direct you towards tech. I'm going to direct you towards your salesperson. And it's not that I don't want to answer your question. It's that maybe I can't. I'm the guy that's going to teach you to read your indicators. That's going to help you with your chart reading. That's going to talk about each and every trade that you take and give you feedback. And that's really my specialty. The tech stuff is on the low end of my pay grade. I'm not great at it. There's some easy fixes that I can help you with, but if I ever direct you towards someone smarter than me, it's because they're smarter than me. And then we've got the tutorial section, guys. Everything that you need to know. Everything that you need to know about using Nexgen for your first 30 days, you're going to find in the tutorial section. In the first 30 days, I say that a lot during this classroom. For your first 30 days, I want you focused on one thing, guys. I want you focused on a high probability trend trade. But even more importantly, I don't want you focused on winning trades. I don't want you focused on having the best win percentage ever. What I really want you to focus on for 30 days is how to enter. How to enter a high probability trend trade. How to pick out exactly where that market is likely to continue. And we focus on this a lot in class. Because if you spend that first 30 days letting yourself be a student, if you spend that first 30 days being really comfortable that you're new, that you don't know everything yet. Guys, I don't know everything yet. It's going to do something for you that's going to carry you through your day trading, really for the rest of your life. And it's going to teach you to read your charts, guys. It's going to let you recognize that your job isn't day trader. Your job is chart reader. Your job is to read the chart, and when it gives you the advantages necessary, you'll take an entry. And 90% of what you do is just going to be reading those charts. It's going to be looking at the indicators, waiting for advantages. But you will, guys, within the next couple weeks, you're going to understand when you open your charts where the market is likely to continue, where it's likely to go, and where it's likely to stop. And you're going to use these key elements to take that high probability trend trade. You're going to use those areas where it's likely to continue for entry points. You're going to be able to pinpoint with amazing accuracy this area where it's likely to continue, and that's going to be where you enter the market. You're ultimately going to understand where the market is likely to go, and this is going to help you create educated guesses on profit targets, and you're going to understand where the market is likely to stop. And guys, we call these termination conditions. And these areas where the market is likely to stop do two things for us. The first thing they do is they let us know that that trend could be over, that we're not trading into a brick wall of support or resistance, and it's going to help keep you safe from trading into an area that may reverse the market. The next thing that these likely to stop areas are going to do is they're going to provide you an anchor for that first 30 days. Focusing on the 5-1 trend trades that happen after a termination condition on the 13-2 chart. We call these termination conditions, these are going to be good tops, good bottoms, strong tops, strong bottoms, and that's the precursor for you taking that high probability trend trade, for looking for that entry, and it's all a result of your chart reading. And it's only 3 rules to take this high probability trend trade, to enter this high probability trend trade. Your large chart needs strong trigger lines. So here's your rules. Here's the advantage. Your large chart needs strong trigger lines, and that's going to provide you the advantage of momentum. Termination false. No area is likely to stop the market. That's going to provide you the advantage of a clear path. And then your entry using a limit order at the areas with the triggers is going to provide you the advantage of entering where the market is likely to continue. So while each rule provides an advantage, on that same token, this is the advantage that you're willfully forfeiting should you decide to break the rules. And what we do is we do this focus on the best of the best initially. Whoops. And we're going to keep it simple. 2 charts. That's all, 2 charts. You're going to see pictures in here with other charts. You're going to see higher time frames. You're going to see different types of charts. And guys, these are from the people that have done their homework, that have built their foundation, created their strong base. Brand new users, in order to find your entries, you need 2 charts. The first one is going to be the 13.2. And you're going to use the most current bar on the 13.2. And it's going to give you so much information. The background of your 13.2 is going to let you know the overall trend of the market. If it's green, we're in an uptrend. If it's red, we're in a downtrend. Looking to take trades that follow that trend is really the first advantage that you give yourself, not fighting the overall trend. You're going to be able to recognize rules 1 and 2 on a 13.2 chart, those strong triggers that give us the advantage of momentum, and those no termination conditions that give us the advantage of a clear path. All of this happens on one bar on the 13.2. It's a broad stroke of a brush. It's a large chart. It's a slow chart. Gives you that overall look of what the market is doing. When these rules are met, guys, we're going to focus our attention on a 5-1 chart. 5-1 chart is a smaller, faster chart. You're going to, refine that broad stroke of a brush. You're going to be able to take that overall, hey, good morning, new trader, good to see you. You're going to be able to take that overall look that the 13.2 provides, and you're going to refine it down into a single area where the market is likely to continue. And that's rule number 3. We're going to use that limit order to buy or sell a pullback at an area inside of favorable large triggers. And it's going to allow you to reduce your risk, and it's going to allow you to maximize your profit potential. And I built a picture the other day for this one, giving you an idea. This one bar that's circled in black on the 13.2, your broad stroke of the brush, recognizing rules 1 and 2. Well, guys, all of that one bar happens in multiple bars on the 5-1. So we're going to take a broad stroke of the brush, and then we're going to refine it on that smaller, faster chart and pinpoint with amazing accuracy where the market is likely to continue. And we're going to use the concept of the crowd to help us do that. Your 13.2 chart is the large crowd. It's going to reflect the opinion of the market. Your 5-1 chart is the small crowd. And these are the guys that are going to get us back to our entry. So trading with the large crowd, but thankful that there's people willing to buck the system to get us back to our best entry. And you'll see how this all comes together when we begin to talk about rules. And we're going to talk about a couple different things. Guys, this is crude oil live right now. We're going to talk about the idea of a clear path when an area hasn't yet been reached. You're going to be able to identify through your chart reading areas where the market is likely to stop. And these are what we call termination conditions, keeping us safe, keeping us from trading into areas that may just make the market hit the brakes and turn around. We had 2 right there, and we're going to talk about how to identify them. But twice, if you went long, you resulted in a loser into a termination condition. And if you went short, it resulted in a loser into a termination condition. So guys, we're going to look for that strength, and we're going to look for that clear path. And everything starts with strength. Everything starts with making sure that you have strong trigger lines. This is rule number 1. And in an uptrend, when that background is green, it means strong triggers mean that your small triggers are above the large triggers. Your large triggers are wide, they're angled in the direction of the trend, and it's the space created between the two that lets me know that the odds are favorable for the market to continue up. And you're going to hear me say in the room a lot, odds favorable momentum, OFM. I want you to get in the habit of typing that on the chart every trade that you take. Did you have it? Or did it weaken? Did those small triggers that were once strong below the large, creating space, everything in the direction of the trend, did those small triggers work their way back inside of the large? Did they weaken the large triggers? Because when they do, anything can happen up or down. Get in the habit when you take a picture, annotate your chart. Odds favorable, anything can happen. And guys, this is your first advantage. That's the one that's going to put you in the right mindset to get you where you need to be. Good morning, Mike. Nice to see you. And what you're going to realize is that that odds favorable momentum doesn't start at the beginning of a move, nor does it continue to the end typically. There's going to be a range where the smalls break away from the large, where the large are wide, they're angled in the direction of the trend, until those small triggers return. And guys, this is going to be the area where you begin to look for the trade, the area where rule number 1 is met. And very often you're going to see these tails. And these tails represent that pullback on the smaller, faster chart, and these are potential entries for on the 5-1 chart when we have that odds favorable momentum. Same thing in a short. From the point where the smalls break away until they return, you'll see these tails or these wicks. Get in the habit of circling them because they are potential entries on a 5-1 chart. So new users, old users, users of all ages, give me a Y in the room if you're with me. Odds favorable momentum. Let's look at nothing but trigger lines here. And let's make sure that everybody's comfortable, right? Everybody's comfortable recognizing this best of the best look. When the small trigger lines break above the large trigger lines, when the large trigger lines are strong, wide, angled in the direction of the trend, guys, I want you doing nothing more than circling tails in the beginning. You're identifying potential entries in a market that says that the odds are favorable, that it may continue in the direction of the trend. Pretty simple, right? Rule number 1 is already met, and you guys have the advantage of odds favorable momentum. Good morning, Cornelio. Nice to see you. I saw your post yesterday. I love that you guys post in the chart when you're brand new, or post in the chat. Get in the habit of doing that. So guys, this is crude oil. I circled that one earlier. There's your midnight line. Over the course of 9 hours, 1, 2, 3, 4, we had 4 instances with odds favorable momentum, right? Good morning, Cal. What does that tell us? That tells us, 1, that we're going to be patient, right? Maybe 5. We're going to be patient. We're going to wait for the best of the best. We're going to stick to that advantage. It means that 90% of the time we're reading charts. We're not taking trades. We're waiting for the best of the best. So once I have that advantage of momentum, let's see, where'd my picture go? That's not it. Once I have my advantage of momentum, guys, we have to have that advantage of a clear path, right? We've got to make sure that we're not trading into an area likely to stop the market. I'm going to give you guys this picture. New users, you'll notice that Gary is putting pictures of his charts of his trades in this room. Guys, that's the second half of the room. We're going to get to each and every picture posted in here, but what we're going to do first is talk about the rules so that we can be consistent, so we can look at them. Gary knows this, but I don't ever want new users to feel like I'm ignoring you. I'm not. We get them after we talk about rules. Once I have momentum, that equation, I have to make sure that I have a clear path, guys. And rule number 2 says that no termination conditions, right? Room to the profit targets. Once again, we'll go right back to the user manual. Right back to rule number 2. What's a termination condition? Well, a termination condition is a Fibonacci-based indicator that may reverse the market based on a comparison of the area and the triggers, guys. And those areas can be blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots. It can be a magenta divergence high. It can be a cyan divergence low. And guys, I'm going to give you this picture. Brand new users, these are the areas that we're going to study. These are the areas that we're going to make sure we're not trading into if they present a problem, if they represent a termination condition. And we'll be able to know that they do from a simple 2-part process. I say simple a lot because I really want it to be, guys. In order to identify a termination condition, the first thing that has to happen is price has to reach that area. Those red price bars work their way down all the way to support in the bottom right-hand corner of the screen. And when they got to that area, I asked myself, where are my trigger lines? So after price reaches any Fibonacci support, check the trigger lines. If they're not below support, don't take any more trend trade shorts on the small chart. You've reached an area likely to stop the market. Your chart reading has just gotten better. And now you know that you don't have the advantage of a clear path. So the concept is simple. It's going to take a while to study. Give me a Y in the room if you're with me. And we're going to mark this one up a little bit. Price reaches support. None of the trigger lines have broken through support, right? These trigger lines work together. 2 solid lines equals a small trigger. 2 dashed lines equals a large trigger. When those trigger lines remain above the area, guys, pump the brakes. You've lost the advantage of a clear path. When both the small trigger lines and the large trigger lines make their way below this area of support, guys, it's game on. You now have the advantage of a clear path. You have an area that's been broken. You have small below, you have large below, and look at that. You have odds favorable momentum. Guys, you may have the makings for a high probability trend trade because you have the advantage of momentum and you have the advantage of a clear path. No triggers, no trade. Both triggers, game on. Is everybody comfortable with that concept? I have so many pictures, guys. I'm going to put the indicators back on this chart so we can go back and look at it. But let's look at an example or two just to make sure you guys are comfortable. Price comes down and create a pivot. And guys, a pivot means that the market goes up and the market goes down. Like that's it. Down to up. This is a pivot. Well, this negative number and this cyan divergence line lets me know that there was a loss of momentum when that pivot happened. Price pushed all the way down to 51.95, but the momentum isn't following. This isn't a termination condition, is it? Trigger lines begin to break through. This isn't an area that's likely to stop the market. This is just the market turning around. When price comes back and reaches that divergence low, this is when I go through that process. Price reaches the area where the trigger lines, well, all the trigger lines remain above that divergence low. This is what we call a pivot stop out. This is your pivot. This is your pivot stop out, and it creates a full reversal. The market goes the other direction. This area likely to stop the market, this termination condition, creates a full reversal. This full reversal gives me odds favorable momentum. Guys, this is what we call a strong bottom. A termination condition that creates a full reversal is a strong bottom, or on that same token, can be a strong top. Price reaches resistance, trigger lines remain below, no more long trades. Price pulls all the way back to support, no trigger lines below, or all my trigger lines are above. No short trades, 90%. Guys, we're only reading charts, we're waiting for advantages. The market pulls all the way back up, does what we call a retest, right? Tested that red line, put its toe in the water, jumped away, came back. It looks at resistance, it looks at that divergence high, another resistance. Each of your indicators or each of your trigger lines remain below resistance. We're not looking for long trades. Even though the trigger lines are green, we're not looking for long trades. Even though we want the market to go up, we're not looking for long trades because we've reached an area that's likely to reverse the market. Well, and it does. Green triggers go red, small triggers go odds favorable. Guys, this is a strong top. For your first 30 days, high probability trend trades that come after a termination condition on the 13-2 are your absolute best chance of success. And here's one that puts that all into perspective. Give me a Y if you recognize small triggers below the large triggers. Large triggers are wide. They're angled in the direction of the trend. Guys, I have odds favorable momentum in this downtrend. Does everybody see it? Odds favorable momentum is amazing. This market is likely to continue in the direction of the trend, but then price reaches an area. Price reaches these one-to-ones, and I'm forced to ask myself, where are my T3 trigger lines? All of my trigger lines remain above support. Rule number 2 is not met. I have a termination condition, and I'm not looking for a short entry. Thank goodness that I didn't, right? Because look at that bounce right off of the area. And then it creates a full reversal. Well, then all my trigger lines get above resistance, and I get odds favorable momentum. And look at the circle right there on the tail. Guys, this is your best of the best. These are the conditions that must be met in order for you to look for an entry. Is everybody comfortable with this concept? Termination conditions tend to be pretty easy for new users. Price reaches an area of resistance. None of the trigger lines break through. No more long trades. Price reaches an area of support. No trigger lines go through. No more short trades. Doesn't this look just like the manual? That manual picture was taken years ago. Guys, this picture is today. Price doesn't reach an area. Do you see that pivot? It didn't make it to that key Fibonacci area, and it pulls all the way back to support. None of the trigger lines go through, but even more importantly, those large trigger lines don't follow. I have more than a full bar's distance back to them. Guys, price tends to snap back and close that gap. That just reinforces the likelihood of this area to hold. Creates a bounce, and then ultimately all of my trigger lines get above that area of resistance. You can see that it begins to act as support. If I scroll back, price reaches resistance, the trigger lines haven't broken through. Guys, technically, rule number 2 is not met. I'm going to get rid of that circle. Same with this one. Pre-market shenanigans. I need both the advantage of momentum and the advantage when those small triggers smash through an area, and then I've got what I need to look for a high probability trend trade. And guys, that high probability trend trade, that entry where the market is likely to continue, is going to be your focus for 30 days. But before we do that, I want you to see something. Did you see how that market turned from the middle of nowhere? We came back, we're like, but Mark, there wasn't a fib, there weren't one-to-ones, there wasn't even a divergence high there. And the market turned around and headed down. Well, guys, there is, and let's see if we have it here. We sure did. So let's go to the manual and then we'll see it live as well. When that market turns from the middle of nowhere, there is one termination condition that I'm going to look for on a 5-1. And only one, guys. And that's 3 divergence in the same price range. It may terminate the trend. Remember, divergence is a loss of momentum. When I lose momentum 3 times in the same general price range, it may terminate the trend. It's not guaranteed to terminate the trend, right? But it may. I lose the advantage of a clear path. Same thing up top. It becomes stronger. The likelihood increases when my small triggers are inside of the large triggers. One loss of momentum, I still have odds favorable momentum. 3 losses of momentum, do you notice how I now have anything can happen triggers? I'm forfeiting the advantage of momentum. Rule number 1 isn't met anymore because of the termination condition. And guys, it becomes even more powerful still when that third divergence is higher than the second or lower than the second from a high. It's that head and shoulders pattern. So you're going to see this look at the high, look at the low, 3 divergences. Maybe when your 13.2 has you searching for that next trend trade. Does that make sense, everybody? You're going to see change on a smaller, faster chart than you will on that broad stroke of a brush, and you're going to do it through using divergence. And not only is this going to keep you from taking trades when the market may reverse, ultimately it's going to get you in a position where you can manage trades. And let's look at this area right here because it happens 1, 2, 3 divergences in the same general price range. Small triggers are inside of the large triggers. And guys, look what happens. We had a clear path. Our smaller, faster chart let us know that that clear path needs to take a little bit of a break. Don't look for that next long trade because your smaller, faster chart is giving you that information. And guys, these are the things that you're going to begin to recognize as you learn to read your indicators, as you learn to read your charts. This information is going to become clear faster and faster, right? It's almost going to be like slow motion. In the beginning, it's going to be moving pretty quick. So let's go back to that equation. What is a trade, guys? A trade is momentum, strong triggers on the 13-2. A trade is no termination conditions, making sure that you have the advantage of a clear path. And then, guys, a trade is an entry area. It's using a limit order to buy or sell a pullback at an area inside of those large triggers, inside of favorable large triggers. So once again, straight from the manual, right? No secrets with Nexgen. Well, I want you to know everything. I want you to have all the information so you can practice this every day. When the rules are met on your 13-2, this is the look on your 5-1. Two chart triggers, 13-2 triggers are strong. There's nothing in the way, guys. My large triggers on the 5-1 should be up and strong, angled in the direction of the trend. All I'm doing right now is identifying areas that may be near those large triggers. And the areas that we'll take a trade from, that 5-1 trend trade, are going to be fibs, Fibonacci support or resistance, mid-bands, and 1-to-1s. Guys, they're just Fibonacci-based indicators. I want you to think of these areas as a backstop, as a wall that you're throwing a tennis ball or a racquetball up against. We're looking for an area for that market to bounce, and it needs to be inside of these large triggers. But the rules say that we are going to buy or sell a pullback. What's a pullback? Well, it's a small retracement in price counter to the underlying trend. Once again, we look at the big crowd, small crowd analogy. The big crowd says up. The big crowd says there's nothing in the way. The big crowd says that we have momentum. Guys, there's always a room full of yahoos that want to fight the system, right? These yahoos give us our pullback. This small crowd says that they want the market to go down even though the large crowd disagrees. The small crowd's going to give us our pullback, guys. The small crowd's going to give us that opportunity to take advantage of the advantages and get in. And it begins with a reversal bar. So when everything says up, I'm waiting for a down bar, and I'm going to create a window of opportunity. For a long trade, my window of opportunity is from the highest point of support, fib, mid-band, or 1-to-1, to the lowest point of support, fib, mid-band, or 1-to-1, and it needs to be inside of those favorable large triggers that are coming up strong. Guys, this is the area where the market is most likely to continue. Remember your chart reading. Where it's likely to continue is how we're going to find our entries, and you're going to activate a limit order right at the top of that window. And one of two things are going to happen. Either the market's going to do what it typically does, and it's going to come back, and you're now going to be in a long trade at 79.21. Does everyone see? Area of support inside of favorable large triggers. The only information that I'm really concerned about on this 5-1 chart is right there, guys. Don't overthink it. From the top of my large triggers to the bottom of my large triggers. Is everybody comfortable with that? Those are my boundaries for my window. And then can we make it even more refined? From the highest point of support to the lowest point of support. Guys, this is your window of opportunity right here. It's not the top of the triggers. It's not the bottom of the triggers. It's the highest point of support to the lowest point of support inside of favorable large triggers. Guys, I'm long at 79.21. I'm long with the advantage of momentum. I'm long with the advantage of a clear path, and I'm long with the advantage of having taken this trade at the area where it's most likely to continue. Guys, this is your high probability trend trade. If you will promise to focus on entries for 30 days, focus on getting that best of the best entry when the rules are met, you're going to understand momentum, clear path. You're going to understand where the market is likely to go through using Fibonacci. You're going to understand where the market is likely to stop using termination conditions. And you're going to understand where the market is likely to continue based on your ability to recognize that window of opportunity. Absolutely. Sure. The one that I created, Walter? And then, Walter, if you want to stick around in class today, I've got 7 or 8 pictures of this window of opportunity, breaking it down, that I'll post in the classroom for you guys. Because window of opportunity tends to be one of the challenges, right? So let me post this one as well. What's a favorable large trigger? A favorable large trigger. They're wide, they're in the direction of the trend, and both the synthetic and the large should be overlapping. This provides the smallest window of opportunity. So Walter, in a long trade, good morning, Paul. And guys, let me share this one. The reversal bar happens, right? We get the pullback. We identify the top of the triggers to the bottom of the triggers, and then we identify the area within. And you can see how these trigger lines overlapping one another creates a small window right at those one-to-ones, right at that mid-band. And guys, the window of opportunity is consistent from the lowest point of the triggers to the highest, and then you can refine it down to that area inside. It's like a brick wall, a place for that market to bounce, for that continuation to happen. So there's a couple pictures for you guys. And guys, things to notice. These one-to-ones, these Fibonacci areas are outside of the large triggers. They don't qualify for the window. This support is outside of the large triggers. It doesn't qualify as the window. Guys, give me a Y in the room if you're with me so far on that. Because this is it. This is 30 days. Cal, where did you send it, my friend? To me where? Did you email it to me? Did you Skype it to me? Did you direct message it to me? Or did you post it into the room? And I'm asking because, guys, your charts I want to see in the room, right? Just like Sam did. I want to see your charts here in the room because I don't check my email during class. You guys get my undivided attention. I don't even check my private messages in Discord during class. My attention, my focus is in here. So Cal, if it's outside of this room, I'll probably get it at the end of class. Cal, when you're posting from your screenshot, and I know that you've done it, remember that you have to copy paste it into the room. All right, guys. Advantage, momentum. Advantage, clear path. Advantage, entry where it's likely to continue. This is a trade that typically wins 70 to 80% of the time. Go back and back test it, right? Focus on your entries for 30 days. For 30 days, your sole purpose in life is to have the advantage of momentum and the advantage of a clear path. Guys, this is crude oil. Someone tell me, what rule hasn't been met as price reaches support and absolutely no trigger lines break through? What advantage would you be giving away if you chose to take an entry at an area inside of favorable large triggers? Rule 2. Exactly, Josh. 60% of the time, Rule 2 works every time, guys. There's no reason to give away that advantage. Your high probability trend trades, guys, may take you to medium probability trend trades. Do you see how we're losing momentum? Yes, it was, Paul. Do you see how we're losing momentum, but we still have it? The smalls are still outside of the large. I love this. Watch this, guys. If I draw a box from the top of the large triggers to the bottom of the large triggers, does everyone see what I'm doing here? And then I shrink that box to represent the areas inside of the favorable large triggers. What do you think? Smalls outside of the large are strong. We've cleared the area. There's a reversal bar. and the market pulls right back to support inside of favorable large triggers. If you have one small trigger inside of a large trigger, so Josh, great question. Let's do it like this. Are you ready? Let's think about it in nothing more than terms of where we're at in it. The beginning of acceleration, right? This is the beginning of odds favorable when they break above. You comfortable? This particular look is absolutely amazing, right? Look at that look. Look at the space. Look at the momentum. And now we're losing it. So straight out of the manual, I love going back to the manual, guys. Let's go to odds favorable momentum. And then Josh, there we go, from the beginning to the end. So if they're getting stronger, they are strong, they're getting weaker. Does that make sense? Beginning, middle, end. Show me a picture of it, Josh. Take a picture of crude at 9:30 and let's talk about it together. Claire, you want to add the 23 small triggers on your 13-2 chart. Having all three charts is overwhelming for you. Claire, this is one of those tech questions where I may defer you to Jason and he'll get you taken care of in a matter of seconds. But I know that you can go to your indicators and you can go to your trigger lines, and there's a way to get them off of other time frames, but it kind of goes beyond my expertise. So hop on with Jason real quick. He'll get you squared away. Or Claire, even in the traders chat room, chances are John Novak will jump in and give you the answer if he sees it, if he sees the question. So momentum question. Josh, I think we're just looking at the same thing. So Josh, what you've done, are you ready, is you have taken the concept of a strong trending market. 30 bars, right? At least 30 bars in the same direction or breaking through multiple Fibonacci areas. This is a strong trending market. And this is a market when it's moving like this, when those large triggers are still a line out coming through, or you see that dashed up top. Ooh, yours really blew up, didn't it? You see that dashed up top. So this lets me know that I'm in a strong trending market. And again, if I go back to the manual, I think John's actually got pictures of that where it's trending strong. And that's exactly the look, Josh, that you're going to see. And pretty much when the market is trending like that, if there's nothing in the way, just like you did, you can take a shot at those trend trades until they stop working. It's not necessarily that it's weakening, it is maintained. And it did. Let's look at your entry, Josh. And I love it when you guys post pictures. That's okay. Strong or weak, Josh? Do we have odds favorable, really strong triggers, or are they kind of at that weakened point? They're weakened a little bit. They're still outside, but yeah, they're working their way back. And now let's do this. Remember when we talked about from the top? Whoops. We talked about from the top of the large triggers to the bottom of the large triggers. Whew, that's a lot of space, isn't it, Josh? So here's your highest point of support, and there's your lowest point of support. It's not quite as big. But remember when we talked about those favorable large triggers? What's the best look? And Josh, this is going to help you. This is going to create that tight window of opportunity when they're trending one on top of the other. Because what's happening is when you've got that established trend, and it's not the strongest of the strong look, this is at least going to make it to where you have the potential for it to come from one tiny little area instead of a big area, right? And I don't know what the price bar is on that one. Let's see. That's probably, I don't know, 15, 20 ticks. If I'm looking at it here from the top to where you got stopped out. Your window of opportunity. Uh-oh, what did I do? I just lost everything. Hold on, guys. Guys, are you with me? Give me a Y in the room if you can hear me. I think I just, okay, cool. That scared me. I thought I blanked everything out. I don't know what I did. So Josh, you've got 10 ticks, right, in your window, which means that your stop has to go below that window, right, below those large triggers. And if we go back to the manual, when we talk about the entry, and we're turning one question into a pretty good lesson here, right? It's not that your stop was too tight, Josh. It's that your trade really wasn't throwing a lot of advantages. How long had that market been going up in a straight line? From 09 to 95, 90 ticks, 9 points, $900 worth of movement, right? Cool. So after $900 worth of movement in one direction, 9 points, you were hoping that weekend triggers and a huge window of opportunity was your best bet for continuation. It's okay. Take a shot at it. If it looks perfect, right? If it looks perfect, if these are one on top of the other, if your window of opportunity is tiny, it's right there, maybe at a mid-band and a fib working together, take a shot because you're in an established trend. But this is typically the result of not getting an entry in a big move. And we try to grab a trade that maybe wasn't really our trade. Overlapping just like this, Josh. This is your best of the best look. And if we go through the pictures here, see how the small's on top of the large and it creates that tiny little window. See how they're split here? Creates some indecision. One on top of the other, tiny little window. So one of the things that you can do is when things maybe aren't perfect on the 13.2, if you can whittle it down through a tiny little window of opportunity, through strong triggers, a lot of times you can overcome that weakening of the triggers on the 13.2. And that's a great segue. And Josh, I hope that helped a little bit. That's a great segue of reminding you guys. In the beginning, what we're looking for is a high probability trend trade. We're looking for a trade when each indicator on every chart agrees. And that's your strongest triggers, right? That's your best of the best look, odds favorable momentum. That's absolutely nothing in your way. And guys, that's that tiny little window of opportunity, giving you the highest advantage getting in at the market where it's likely to continue. Great job, Cal. I see you now. I'm going to go through the charts before yours before we look at it. That's a test. If it's a test, let's make sure that we see what you see. Whew, that's big. I love it. Let me get my magnifier off here. Holy smokes. There we go. Nice, Cal. Great picture, great test picture. And then Josh and everybody else listening, your ability to read your charts. This is where the magic happens with Nexgen. When you focus on that entry for 20 trading days, 30 days. And guys, do you want to know how to get 20 trading days worth of knowledge in half the time? Use your market replay. Double your reps. When you're comfortable reading your charts, when you feel good about what you're seeing and you can dissect the information almost instantly, you're going to move into a medium probability trade when most of the indicators line up for a trade, right? However, a small issue exists. And notice that issue is singular. Not a bunch of small issues exist, but a small issue exists. So Josh, we didn't have the absolute blessed trigger look, right? That could be considered a small issue. But then we have not the best trigger look. We have a wide window. So we're kind of multiplying those issues, aren't we? Maybe we've gone from medium to low. And this is how I think about it. I think of everything in terms of advantages. I want you to do the same. This is going to be the vast majority of your trade, guys. This is going to be areas with the potential to break but haven't broken. This is going to be weaker triggers, but a great setup on every other chart. But when you execute medium probability trades, you're going to manage them assertively. Your chart reading is going to enable you to manage these assertively. And how are you going to do that? Guys, you're going to do that on a smaller, faster chart. So if I know that this is a medium probability trade, if I get in at the mid bands, if I get in at these 1-to-1s, my best of the best entry, because the great entries create manageable trades. When I get 3 divergences on this smaller chart, I know that it's time to exit because it may be reversing, guys. So you're going to manage assertively, and you may be able to take off a portion at a trouble spot. You may be able to get to a zero loss level. But the focus initially, guys, is the entry of the high probability trend trade, giving yourself every advantage as you get in, building the recognition, and understanding when you have the advantage of a clear path, when you have the advantage of momentum and taking that entry from the area where it's most likely to continue. So guys, I'm going to ask you, if you're brand new, because this is a new users class, right? If you're brand new with me, if you are my Mohammed, my Cornelio Spoonie, Be Loyal, Christina, and even you guys that started up your demo and you're still in the learning process, are you comfortable with what you're seeing? Are you comfortable with the idea of momentum? Are you becoming more comfortable with your ability to recognize areas that may stop the market? And how are we doing on entries? Because entries are going to make these trades manageable. And entries are really what we're going to focus on for the first 30 days. Because guys, I'm telling you, when you get in at the best of the best spot, it becomes very, very manageable. Let's look at the live market for a minute. Look at that thing grinding up. Holy smokes. And now we're just going to take a look. Let's see. This is crude oil. I see odds favorable momentum. Let's circle it. And this is your quick little pop quiz. Did price pull back to the area inside of favorable large triggers? Let's get rid of the circle. Josh, you say yes? All right, let's take a look, guys. I like that you said yes. And I'm going to do this. Safia says no. Zeba says no. Zeba's confused. No, you're not. You're good, Zeba. Let's put just the triggers on there because all we're going to focus on is entry, right? All we're going to focus on is window of opportunity. I'm not going to worry about termination conditions. So let's pretend that this is what it looks like in the moment, guys. Smalls below the large are wide. They're angled in the direction of the trend. Hey, Joel. Especially my new users, can you see that we have odds favorable momentum? Jose, I did a complete rebuild on Monday. That may have something to do with it. This is also no trigger lines. Hey, Christina, welcome to the class. Get with Jason, Jose. If you feel like something's off, jump in with Jason and Tech. And guys, I'm going to share this with you too. Hey, Jim. Good to have you. Man, I love seeing all the new people. New people, I am going to teach you to read indicators. I'm going to teach you to read your charts. I'm going to teach you to recognize entries, momentum, all that great stuff. If you have a tech problem, I want you to go to Jason Sager because Jason Sager is amazing. The only stuff that Jason can't fix are things that aren't broken. Pretty amazing. So make sure if maybe your charts don't feel right, your software isn't opening, you're getting weird messages, reach out to Jason. He can fix almost anything in a matter of seconds. And it leaves the classroom open for education a little bit more. Jose, it's probably an easy fix, and Jason will see it before I do. So man, I love all these new people. Guys, great to have you here. We're talking about entries because entries are our focus for the first 30 days, getting in at the best of the best spot. Entries only come after we have momentum. So give me you guys said yes on momentum. Let's talk termination conditions. Did price reach an area? Did we hit a fib? No. So I have a clear path and I have momentum, right? Look at that 5-1. Let's refine that broad stroke of a brush. Notice that I'm not circling a tail because we're live in the market. This is brand spanking new in front of us. There's no tails to be had. Everything is coming down, right? My large triggers are down. They're getting wide. All I'm doing right now, guys, is I'm looking. Where are the areas? Fibs, mid-bands, 1-to-1s. Do you guys see it? I see a mid-band. I see a fib. I see a fib. On my 5-1, my rules say that I'm going to sell a pullback. And a pullback is a small retracement in price. See how the market moves down? So do the triggers. As the market moves down, so does the mid-band. A pullback is a small retracement in price counter to the underlying trend. The underlying trend is down, isn't it? Odds favorable, nothing in the way. Everything says down. I want this market to go up. So I'm going to wait for a reversal bar. At the time of the reversal bar, guys, let's create a window of opportunity together. You can do this on your own. You can study this. Let's go from the highest point of the triggers to the lowest point of the triggers. Is everybody comfortable with this look? From the highest point to the lowest point? They're not really one on top of the other either, are they? So now let's create the window of opportunity. From the highest point of resistance, which would be Fibonacci resistance, right? To the lowest point of resistance. Once again, Fibonacci resistance. The mid-band is still outside, Ziba. And it's about 3 or 4 ticks outside. I want this to get a little bit closer. And let's see if it does. The mid-band's coming down, but these trigger lines are kind of flattening out. I'm still a good 4 ticks below, right? I'm still a good 4 ticks below those large triggers. I'm going to keep my window where it's at. I'm going to make sure, as a brand new user, that I'm taking the best of the best. And the market comes up, and it hits that mid-band. And guys, and then it goes without us. Oh, maybe it's coming back. Oh, and it goes without us again. And guys, this is one of those things that's going to happen. As a brand new user, your entry was resistance inside of favorable large triggers, right? This is one of the hardest lessons for brand new users, is it means sometimes you have to accept that it just wasn't your trade. That one happened to be directly into a termination condition. Give me a Y in the room if you're with me on this. All we're doing is identifying how to recognize the market didn't fill us, Ziba. It didn't pull back to an area of resistance inside of favorable large triggers. Therefore, my rule wasn't met. Therefore, I had no trade. I'll tell you what, we're going to do the same thing on this one, and then I'll scroll back the other way because I just worked so hard to get to this setup. We're going to go through the entry again. On my 13-2, guys, odds favorable, yes or no? Give me a Y or an N in the room. Absolutely. In Sofia, that happens sometimes, doesn't it? And that's why we wait for the best of the best area. Because we know where the area is likely to continue. Guys, that's your advantage, isn't it? The advantage is having an entry at the area where the market is likely to continue. Which means that if I start taking trades outside of that window of opportunity, well, I'm not taking trades at the area where the market's likely to continue, am I? And then I'm breaking rules. And in the beginning, we really want to focus on our ability to follow rules. And when I say we, I mean you. Smalls above the large, larger wide, angled in the direction of the trend, and absolutely nothing in the way, guys. Your 13-2 says that you have a clear path. I'm looking and I see fibs and a mid-band and fibs and large triggers starting to come up. All right, what am I waiting for so I can create a window of opportunity as that market's trending up? What's that 5-1 have to give me? A reversal bar, a pullback, exactly. And that pullback starts just like this. Zeba, see how they're touching? Completely different look, isn't it? Rather than 4 or 5. And Zeba, that's because you're brand new. Because right now, the only thing I want you focusing on is getting in. And then we're going to set up stops and targets, and they either get hit or they don't. We're going to keep it simple. We'll talk about that management. Guys, from the lowest point of those large triggers to the highest point of those large triggers. Do you see it? All we've done is identified the large triggers. So now we're going to identify the lowest point of support, which happens to be this Fibonacci line, to the highest point of support, which is that mid-band. Give me a Y in the room if you're with me, guys. The green triangle is nothing more than trigger lines. The circle represents that window of opportunity where the market is likely to continue. Guys, your job is to place a limit order, a tick or two above that highest point of support, right? A tick or two above that highest point of support. And then just sit on your hands and either the market comes down. See how my highest point of support is the mid-band? The mid-band's coming up. The triggers are coming up. It's okay to adjust your entry to a tick or two above that highest point of support. The market comes down. And look at that, guys. A tick above the mid-band. You just got filled at 74.33 with the advantage of momentum. You got filled with the advantage of no termination conditions. And guys, you got filled with the advantage of entering from that point of support inside of favorable large triggers. This is your high probability trend trade. And look what odds favorable momentum does for us. It just keeps going. So this is where I ask, can we commit? Can we commit for 30 days to identifying entries? Smalls above the large are wide, they're angled in the direction of the trend. Guys, your first pullback with one divergence was directly to a mid-band inside of favorable large triggers. Does everybody see it? This is the market right now. And then Zeba, there's that first one that we did. It didn't make it to the area inside of favorable large triggers. So if I entered this trade right here at 75.64, don't multiple divergences tell me that I'm losing an advantage? See how this can become managed? Maybe I take quick profits, I get to a zero loss level. I assume that it was, Josh. I don't have indicators on there right now because all we're looking at is potential entries. But watch this. Just what Josh said. Let's get those indicators on there. Directly into a termination condition, isn't it? No trigger lines have broken through. Rule number 2 is not met, no clear path. Guys, if you're a brand new user, that's not your trade. But if you are a brand new user, do you still see that it pulled right back to support inside of favorable large triggers? Pretty amazing, right? So now we play if then. If the trigger lines break through this area, the small smash through with odds favorable momentum, we'll look for continuation up. But if they never get through, well, we're going to have to get a full reversal to wait for that short trade. So right now you're in a holding pattern. 90% of what you do is waiting for the advantages. Does that make sense, guys? Live and in the moment. Termination condition. Look at that. We also had 3 divergences, didn't we? Termination condition creates a full reversal. Smalls are beginning to break below the large, but we have to identify this area of support as a trouble spot. Guys, I'm going to leave you with the S&P for just a minute. When I come back, so new trader, great question. Let me pull up a picture. I love that you guys make it hard for me to take a break because you're so excited. New trader, from the top of the triggers to the bottom of the triggers, right? That's just where we're looking for areas in this red box. Reversal bar starts it. The only area that's inside, below the top and above the bottom, is this midband. So your window of opportunity is literally one line wide here. Do you see it? These 1-to-1s are outside of the trigger lines, therefore they're not in the window. These fibs are outside of the trigger line, therefore they're not in the window. You know, Jim, we use MACDs, but they're written in the background, so you don't have to pay attention to them. When MACDs and price don't agree, Jim, you know that there's a divergence, right? You know that there's a discrepancy between price and momentum. That's what this negative number, that's what this cyan line tells you. This is your MACD reading written in the background, so you don't have to go through the math. All you have to do is see it print. In new trader, 3 areas that we take a trade from, right? Fibs, midbands, 1-to-1s. Notice that it doesn't say divergence. We don't trade the divergence line. We're trading the midband. Does that make sense? And guys, when you start to see everything, you're going to try to make rules up. You're going to try to say, well, this small trigger turned green, therefore I don't have a trade. 1 divergence printed on my 5-1, therefore I don't have a trade. And you're going to try to outsmart yourself. Keep it simple. Give yourself the advantage of momentum. Oh, Jim, we're glad to have you here. Keep it simple. Where's that picture? Keeping it simple. Keep it simple for 30 days, guys. Momentum, clear path, entry area. Focus on the entry area. Nothing but the entry area. Everything else is going to work itself out. Zeba, focus on the entry area. Everything else is going to work itself out. Guys, I'm going to take just a minute. I'm going to leave you with the live market because look what termination conditions do. Let's do it live. Smalls below the large are wide. They're angled in the direction of the trend. There's the top of my triggers. There's the bottom of my triggers. Look at how quick this happens. There's my highest point of resistance. There's my lowest point of resistance inside of favorable large triggers. All I have to do is right click and put a limit order at the bottom of that window. That's your entry. That's how quickly you'll be able to make these decisions, guys. But what just happened? Somebody, bonus points. Perfect, Paul. Termination condition. Price reached an area of support to the tick. Absolutely none of my trigger lines broke through. I'm not taking trades without the advantage of a clear path. So Jim, Mohammed, Cornelia, Spooner, B, Loyal, Christina. Guys, this is what we're going to do every day until you're comfortable. Zeba, do you need me sitting here for you to see what happens? My rule's not met, no trade. Nothing's going to happen with me. I'm going to go refill my water. But I'll leave it up. Let's see what happens, guys. I'll be back in just a couple minutes. All right, guys, so let's see what happened. It pulled right back to resistance inside of favorable large triggers, didn't it? Was it a trade for us? Was it a brand new user trade? Cal, I will. Cal, when you guys post in the room, I go through rules. We go through the first hour, and then I backtrack and go through. Guys, even though rule number 2 wasn't met, your entry plan is pretty consistent, isn't it? This trade has no advantage of a clear path, but the entry still came right from resistance inside of favorable large triggers. And Jim, you're asking, will it likely? Let me give you my answer. I have no idea. I never know what the market's going to do, Jim, but what I can do is I can say 5 divergences in the same location is a pretty good indication that it's probably going to push lower. It may push lower. A termination condition certainly kind of reinforces that. So this is small chart giving you an idea of what the large chart's doing. But then, Jim, if we look at it, price pulls all the way back to a mid-band. It pulls all the way back to this area. And none of my triggers are below 75.58, which means I'm kind of caught between 81 and 58. Large triggers are up, small triggers are down. Large synthetics are up, small triggers are down. Jim, you can use Fibonacci to identify these little boundaries in a market that take away your advantage of a clear path, right? You can identify those boundaries and you can say to yourself, well, I'm going to let it break before we go. Very nice, Sam. So guys, let's go through and let's see what you're doing. I'm going to scroll up to the top and we're going to take a look at the charts that you guys have posted. And I want you to remember that my job is to provide feedback. You have to trade your rules, right? You have to trade your plan. We'll talk about what I see, we'll talk about what you see, and we'll work together to get you where you want to be. Scrolling. Almost there. I'm going to find my first one, but I want you guys to see something. When I scroll to find your charts, I go through an awful lot of pictures back and forth, and I can't see the bottom of the chat box, so it might take me a second to get back to your question. We're going to start with Gary today. Gary posted a picture for us. He says 50-50 look, wait for the pullback to the mid-band. He's saying his small triggers have broken through, his large triggers have not. He has strong triggers. He's looking for a potential pullback to an area of support inside of favorable large triggers, and I don't believe that one ever got it. Guys, this is what we call a pre-trade picture. This is going through, analyzing your rules, talking about what you see, and determining whether or not it's appropriate for you to take a trade if you see the rules met. So there's that termination that creates a full reversal that gives him odds favorable momentum. Once again, the area hasn't broken yet. The smalls are through, the large are not. This area has the potential, but it hasn't broken. Your smaller chart, through multiple divergences, through trigger line location, says that this area may not end up breaking. It gives you an opportunity to stay out of those potential trouble spots. Waiting for those rules to be met 100% and clear provides an advantage. All right, Sam, you had odds favorable in that heavy trending market. You had a clear path, nothing in the way. You had a mid-band right there at your favorable large triggers, and you enter right at the area. Sam, medium probability trade. Your synthetics are up top, your large are down here, and you're just below it, but perfect execution identifying an area where the market's likely to continue. Jose, you had odds favorable momentum. I love the annotation. No termination condition. You take a perfect entry at an area of support inside of favorable large triggers, and you take quick profits and make that money. Jose, what a great trade. And guys, remember, it doesn't have to be your chart to learn something, right? You can look at any one of these charts. Take the information, take the lessons. Who was this one? I'm scrolling back and forth just to make sure. Gary, both triggers above. Tail into momentum, right? But the smalls are outside. And Josh, I think this is the one that we may have talked about. Perfect pullback, area of support inside of favorable large triggers. Quick profits along the way. Quick profits at the trouble spot. Second divergence, triggers inside. Gary says, I'm not losing money on this trade. It might not keep going. Perfect trade, Gary. Perfect execution. Jose, losing momentum, right, on a 50-50. Divergence prints on the 50-50. You get in at the lowest point, and it doesn't work out. Guys, I want you to remember, and let's talk about this real quick. Let's pause on Jose's, and let's talk about the difference between an area that's broken and an area that has the potential to break. When both sets of trigger lines make it through an area, guys, the area is broken. When the small and large are through the area is broken. When the smalls have broken through, but the large haven't made it yet, guys, this is an area with the potential to break, but it hasn't yet broken. Give me a Y in the room if you're with me on that. It has the potential to break. Exactly, new trader. We call this a 50-50. And we don't call it a 50-50 because of your odds of survival, right? Racha, will you do me a favor? Will you show me your 13-2 chart and write your rules? Because I don't know what rules you're trading. So it's hard for me to say if you made a proper trade for your plan. I can tell you that at first glance, I don't see any pullbacks for entries. Which is okay if that's your plan. I've got clients. There's Nexgen users that don't use it. And guys, on that same note, if you're brand new, this is a great way to present a chart. Show me your large chart, your higher time frame, and show me your entry chart, and let's make sure that everything agrees. And it makes it easier for me to give you that feedback. All right, guys, so what's a 50-50? What's an area with the potential to break but hasn't broken? And I want you to understand, this is no longer a high probability trend trade. This goes into that medium. What's the small issue? The small issue is that the smalls made it below the large, but the large remained above. Is everybody comfortable with that part of it? The smalls have broken through. The large have remained above. Let's give myself a little bit of room to write here. All right, guys, this is a 50-50. I think I've made this picture 1,000 times, and I love making it because it reminds us where we stand. 50-50. Smalls through, and guys, here's the key. With odds favorable momentum. Area has the potential to break, but it has not broken. Everybody's comfortable with that concept? This support has the potential to break with that odds favorable momentum, but it hasn't broken yet. I don't have the advantage of a clear path. I have a potential clear path. New users. And guys, I say this for new users. Let your entry on the 5-1, whoops, be perfect. No divergence, right? No slowdown. Small window of opportunity. Strong triggers. Does that make sense? If an area only has the potential to break, we don't have the advantage of a clear path. This is my small issue, right? Make sure that there's no divergence on the 5-1. Don't compound a loss of momentum to an area that only has the potential to break. Make sure your window of opportunity is tight. Don't compound a huge window more risk with an area that only has the potential to break, right? Make sure your small triggers are outside of the large triggers. So when I have an area with the potential but hasn't, guys, I'm looking for perfect small charts. I'm looking for something that makes me feel good about taking a trade into an area that hasn't yet broken. Is everybody comfortable with that? And then that to be said, Jose, you're at the tail end of momentum, right? We're losing momentum at an area that hasn't yet broken. And then we're losing momentum again at an area that hasn't yet broken. Do you see how we've given away the advantage of momentum? It's beginning to wane, but then it's verified again on a loss of momentum here, and we just haven't made it through the area yet. So I've got a 50-50 with less momentum. And then Jose uses a higher time frame here. I've also got a 50-50 on a higher time frame. So I've got might break, could break, but even less momentum. Even less momentum. Jose, does that make sense? You may be trading right now and not see that. New users, does that make sense? Look at the momentum here. And even into a termination condition, that market gets a pretty good push. How many advantages are you willing to give away and still take a trade? This is what I ask myself every time I take a trade, guys. How many advantages do I have? How many am I willing to give away? And I am willing to give away advantages here if everything is perfect here. Great picture, Jose. Awesome lesson. Let me see where we're at. I'm going to scroll up, guys, and we're going to find some people posting pictures and make sure that we're good. All right. Sam, we saw yours. Jose, that was you. Gary, you went rock star. Paul, let's see what you did. Paul says we're losing momentum, right? But we still have it. He has the advantage of a clear path. He has the advantage of strong triggers. He's trading with the trend. And he's saying to himself, well, this is slowing down a little bit. You'll notice that Paul takes the perfect entry. Perfect entries make trades manageable. He takes quick profits. And he's not willing to lose when his smaller chart begins to tell him that the momentum is going away. The loss of momentum on the 13.2 is verified by multiple divergences and weakened triggers on the 5-1. Creates an amazing management opportunity for Paul. Paul, great trade. Nice job. Awesome, Jim. Great question. Great question. Let's answer it. And I'm going to do it. And Jim, you have the burden of being smart. You have the burden of already understanding a lot of things. We use the T3 trigger lines to gauge momentum. Man, it is for me. And when we talk about the trigger lines, these are just moving indicators. Or moving averages, excuse me. Jim, true story, I know very little about moving averages. I don't know how they come to be. I understand the two words, moving and average, but I really don't know what they mean other than in an uptrend when that background is green, Jim, and those small trigger lines break above the large. Small is a faster moving average, large is slower. When I get this separation between the two, that distance between the two, the smaller up and strong, the larger up and strong, when I have this look, the odds are favorable for the market to continue up. This is a look that lets me know that there's a tremendous amount of momentum in the market going with the direction of the trend. In a downtrend, when the smalls accelerate away, that space is created, the larger wide. Once again, the odds are favorable for the market to continue down. It's really a pretty simple two-trigger indicator, just letting me know I either have that great momentum, or as the small trigger lines return and go back inside of the large, then it becomes a loss of momentum. We've begun to weaken. So if you look at Paul's picture, we had that odds favorable. Everything was saying up, right? And then as they returned to the triggers, he was identifying that momentum was slowing just a little bit. And then he was able to say, well, it's slowing, but I'm above Fibonacci support. All of my trigger lines have broken resistance. It's beginning to act as support. And he used that entry, entering in an area of support inside of favorable large triggers, to give him an unbelievably manageable trade. He was in at 24. Where were you in, Paul? 25, 25? 23, 20? It's hard to tell. He was in at 25, 25. So by the time he gets his first reversal bar, Paul's looking at 2 or 3 ticks risk because of the tail end of momentum, because of the clear path, because of identifying where the market is likely to continue. And he took profits. And then these slowdowns, see how the triggers go from outside to inside? That's a loss of momentum. And then these divergencing print, using the MACDs in the background, let us know that we're losing momentum even more. So he's able to manage out of a trade and still make profits before that market begins to push down even further. Does that make sense, Jim? Paul, great management on an awesome entry. And then Jim, awesome. My commitment to you is that we'll have these conversations every day until you're comfortable. And if you ask the same question 100 times, I love it because it makes me a better trader. I love the reinforcement. All right, let me see where we're at here. Bum, bum, bum. All right, we just got Paul. Gary posted in all caps. He said no trade. Gary said that his pivot didn't come from a key area. And when he reached the mid band, guys, this is the gap theory. And this is a termination condition. And I want you to see this. When price accelerates away from these large triggers and reaches an area, whether it's fibs, mid bands, one-to-ones, this is what we call the gap theory. Price is likely to snap right back to those large triggers. So when it accelerates too far, too fast into an area, fibs, mid bands, it's likely to snap right back. And that's exactly what this one did. Gary says, well, it accelerated too far. My large triggers are more than a full bar away. See how there was room for the entire reversal bar? This area is like a vacuum. It sucks price right back to those large triggers. And if you try to take that 50-50, you try to take that short trade in the vacuum, well, it gets absolutely annihilated. Multiple divergences. There's a vacuum back to the triggers. There's just nothing to do here. Great read. What an awesome read to stay out of trouble. Jose, let's see what you did, my friend. And then Jose, we already saw this one, right? Losing momentum, 50-50. I think we already saw that trade you posted twice. Maybe you meant to do this one. That's a great bottom, right? Termination creates a full reversal. Full reversal begins to give that odds favorable. Odds favorable gives us a no divergence pullback to the area inside of favorable large triggers. And I'll be darned, it goes right to your target. Nice job, Jose. What a beautiful trade. Taking advantage, right? And you're surrounded with fibs. Sometimes it happens like that. 90% of what we do, guys, is waiting for an advantage. If you're surrounded by fibs, it means that there was enough psychological action in that market to create these. There were enough pivots, enough fear, enough greed for your software to open up, do all its calculations, and say these are areas that are potential turning points. And sometimes they're close together. Guys, if you can't go short because of fibs and you can't go long because of fibs, what's your option? Sit on your hands, right? Do nothing. Relax. Just wait. Sam, odds favorable, no termination. Look at that entry, guys. Sam, how long have you been with us? 3 weeks, 4 weeks? Maybe 30 days now? "12 days. In 12 days, Sam's able to recognize momentum. He's able to recognize that he hasn't reached the area. He's able to recognize that this divergence high may create a problem, right? But because of the momentum, Sam takes a perfect entry, has virtually no risk when it begins to go in the direction of his trade, and is able to get paid. 12 market days. Sam, do you see a future in it? I hope so, because you are doing wonderful. And I think even more importantly, Sam, you're doing wonderful because you're studying, because you're asking questions, because you're focusing on simplicity to get you to the next level. Guys, it's like watching your kids graduate from high school. When I see you guys taking these great trades, when I see you guys following rules, when I see you guys being conservative and not trading into termination conditions, it makes me proud. It's silly, I know. There's that same picture, Gary. Termination condition, no trade, right? Gary says, this is a great termination condition. I have a lot of divergences. Maybe he'll take a trade short if the conditions are met. Nice job. And then Gary going counter trend. Gary, I didn't know that you had a counter trend trade in there, right? I don't see a high volume area anywhere. Maybe I'm mistaken. HVA line at the same spot of small, wide, and large. I don't see a high volume area, Gary. I think you broke a rule. It went down. Termination creates a full reversal, gives odds favorable momentum. All the trigger lines roll. You take a pullback. It's great patience, but it's not a high volume area trade. There was an HVA line there and it disappeared? Or is it just hidden? Or was there a divergence line? I don't know, because that HVA line printed on top of every bar, didn't it? It stands to reason that one to the short side would do the same. It's okay. But you didn't even have the conditions met for an HVA short line. You didn't have a breakout bar followed by an up bar, a reversal bar to create that rundown. Gary, it's an amazing read. It's a termination. You had the patience to wait for everything to roll. The difference between an area that might hold and an area that's held, right? All right, we're getting through this. I got to my first break picture. Sam, we've got another one from you. Sam says, ooh, Sam, is it medium probability or is it low probability here? Directly into a termination condition. So Sam, tell me, what advantage did you give away into this trade? And I'm going to look at this in two different ways, guys. What advantage did you say, I'm willing to not worry about? The clear path, right? Trading directly into an area likely to stop the market has the potential. But Sam, let's look at the other side. You had a great top that created a full reversal, right? This is a strong indication. Your momentum was probably the best look that you could possibly have. Are you with me so far? Your entry was so good that your risk would have been minimal if this termination condition decided to reverse the market. And then Sam, what you just did is you just started looking at a potential next level scenario. With this much momentum, and this perfect of an entry and this odds favorable momentum and this great top, there's the potential that it may retest. It's a low probability trade, but you managed it beautifully. As long as you recognize that it's not medium, you gave away the advantage, but there were so many things going for that trade when you took it that it might have been worth the risk. And where was it? Was that crude or was that the S&P? That was the S&P. So let me switch my charts real quick. And let's look. Look at the bounce that termination condition created, right? If you took the perfect entry with that much momentum, well, it gave you a chance to manage out. 2 divergences, triggers inside. Absolutely beautiful. And then, guys, look what happens. From this fib, it pushes all the way up to this fib. If you had to, based on trigger lines, make a decision on which fib has the best chance of winning, support with momentum and large triggers down or resistance with everything down, it comes right back, uses that area of support as resistance, and finishes the move to the next key area. Once again, it gives us a termination condition. But look at the difference in your trigger lines. Odds favorable, almost to the wrong side of anything can happen. And what happens down here at 40.1375? Doesn't even give a slowdown, does it? Odds favorable gives a little extra push to retest before it goes against you. Anything can happen. Doesn't even blink. Runs you over instantly. Guys, give me a Y in the room, if that makes sense. In the beginning, all you're looking for is to have the advantages, to take the trades, to give yourself the best chance of success, right? Ultimately, you're going to be able to read your indicators. You're going to be able to understand, well, I have an issue, but I've got so many advantages that perhaps I'll take a shot at it. In the beginning, guys, focus on the best of the best. But your ability to read your charts is going to open doors for you that may seem closed right now as a new user. New users, for the first 30 days, I want you to just focus on entries. Focus on the recipe for a trade. So Cal, I think the question why? Oh no, Safia, I'm still going through. Guys, you're doing an amazing job posting pictures today, which means I have a lot of charts to review. If I do miss you, make sure you let me know. But Safia, I haven't seen yours yet. Let me see. And maybe I did. Post it again for me and I'll get it. Guys, when I'm going through this many pictures, every now and then I'm going to step over one. And I apologize for that if I do. It's never intentional. I don't have favorites. You're all my favorites. All right, new trader. Safia, will you post it again for me and I'll go right to it? Same thing we just talked about, right? Termination condition. Rule 2 not met, right, new? Directly into a termination condition. Trigger didn't penetrate. That means this is an area likely to stop the market. Because you took such a good entry, it becomes manageable with that much momentum. So new trader, as long as you understand that you've given away the advantage, of a clear path. And then Racha, you were asking, how'd we do? Let's see. Racha, are you with me? Awesome. So Racha, not a high probability trend trade, but I tell you right now, Ron C is smiling like the cat that ate the canary. What you've done here is you've taken advantage of momentum, right? You've identified these strong trigger lines. You've identified a clear path. You've gotten in when trouble clears, and you gotten out before trouble hits. You get in when trouble clears. You get out when trouble hits. Racha, this is an amazing set of trades. It's not high probability trend trades, but it is the advantage of momentum. It is the advantage of a clear path, and it very much shows that you have an ability to temper greed. Get in, make your money, get out. Get in, and you're using Fibonacci to identify when it's time to get in and when it's time to get out. Racha, I love everything about these trades. Not a brand new user trade though, right? Not a high probability trend trade. But guys, this just kind of reinforces that when you begin to read your charts, when you understand momentum, when you understand termination conditions, you can formulate a plan that suits your tolerances. Racha, beautiful trading. Nice job. Safia, let's see what we have. I have strong triggers, smalls above the large are wide, they're angled in the direction of the trend. We're at the tail end of momentum. Clear path, still outside. You've identified the area of support inside of favorable large triggers, and you're waiting for that market to come back to you. And it did, didn't it? What's this? Okay, that's your 13.2. Look at that entry, Safia. Did you need feedback or were you just showing off? Because it feels like you were just showing off. Beautiful trade. Rules-based. How does Safia know it's rules-based? Because you have your checklist. Guys, who wants a copy of Safia's checklist? I'm going to give it away, no matter what she says. There you go. Guys, the first one that I gave you is just exactly what she has posted on her charts, guys. It's nothing more than a checklist that says, these are my rules, these are my conditions for entry. In order to take a trade, in order to pull the trigger, these conditions must be met for entry, right? That's it. Ziva, you're going to have charts that look just like hers if you follow the same path she did. Guys, focus on the checklist. So Jim, there's a checklist for that high probability trend trade entry. The second checklist that I put just below it, guys, is the exact same checklist, but I stole pictures from the manual showing what those conditions look like visually. So I gave you one to print out to put on your desktop, and then I also gave you one that actually gives you a visual. Absolutely. No worries, Eva. Keep processing. And keep asking questions. You're on a great path. Safia, beautiful trade. Let's see where we're at. Coming through, coming through, coming through. Racha, we saw yours, and everybody is awestruck. Claire, let's see what you got. Claire says, here's a termination condition. Here's odds favorable momentum. Here's a momentum-based entry, and here's some exits. What a great job. Claire, you and Racha apparently are sitting in the same room with Ron doing the exact same thing. New trader, we saw that one. Good job. Jason Theme. How we doing today, Jason? Let's see. Guys, remember the checklist is only as good as your ability to use it, right? Fill that thing out. Miss this trades. Fits all my rules except termination condition. I love that. Jason, what did you just tell me with that picture? It is, isn't it? But doesn't this one next to it fit all your rules except termination condition? Doesn't this one down here fit all your rules except termination condition? See how that works, guys? Just because this one goes doesn't mean that your rules are wrong. There are no absolutes in day trading. There are no absolutes in termination conditions. Hell, there's absolutely no absolutes in regards of what can be accomplished with odds favorable momentum. We put in and do the time and study the rules. No worries, Christina. I just posted them in the room. Let me post them again right below for you. There you go right there. So you can click on them and you can download them. And Christina, I'm going to put these in the room every day. Every day. Until you're so stinking good at this, you don't know what to do with yourself. Promise. You're stuck with me. So guys, this is a great, no, don't ever say sorry, please. Don't ever say sorry. You're brand new. You're letting yourself be new. What a gift that is to yourself. Don't lose that. Oh, well, that explains everything, doesn't it? Eh? I don't know. I don't know what that means. Canadian people tend to be pretty smart too. It's cold up there. Maybe the cold slows you down a little bit. And guys, one thing you're going to notice, Christina and everybody else that's new to this room, is we very much are a community, right? Okay. But you say sorry. This is an amazing community, and everybody here is looking out for everybody, and everybody's going to the success. Cal, if you want to give me your email, I'd be more than happy to. If you want to pop it in the room, I'll take it. I'll be more than happy to email that to you if that's easier for you. But Jason, this is like the best ever. You said everything was met except termination, and you chose not to take it. I love it. Careful. Don't leave orders hanging. But this is why, guys. Termination condition that works. Termination condition that works. And there's the one that didn't hold. The conditions are the same on every one, aren't they? So what we're doing is we're creating a set of rules. We're creating a set of rules that gives us an advantage so that we have that statistical advantage every time we're willing to pull the trigger. And that's exactly why we respect termination conditions. That's exactly why we don't break our rules, because our rules are designed to help keep us safe, right? Sorry, I'm multitasking right now. And I'm not very good at it. All right, Cal, it's in your email right now. And Jason, patience is the key, right? And you have to be okay missing this one. You have to be okay missing this one because it takes away that advantage of a clear path. And that's all we're doing, guys, is we're taking statistical advantages and we're trying to capitalize. Let me see where we're at. New trader, we saw yours. I think, Jason, we saw yours. Claire, you gave us another look. Let's see what we have here. Termination condition creates a full reversal. Full reversal creates odds favorable momentum. Claire's created a plan for herself that takes advantage of termination conditions and momentum. You are on the wrong side of the one-to-ones, but Claire, beautiful. You know, this morning I was messing with Ron, and I posted consistency. I posted the definition of consistency because all of his trades look the same. All of Claire's trades look the same. There's a reason that they're consistent, because they're doing the same thing every time. They're creating the expectation. All right, 50-50, right? They're creating that expectation through consistency. All right, so Sam, let's talk through it. Everybody, does this area have the potential to break, or has it broken? What do you think? Potential or broken? Potential, exactly. So not quite a clear path. And then look at that. Now you get a loss of momentum, Sam. And you also don't have an area of support inside of favorable large triggers, do you? I thought so. It just got bounced back, Cal. Do you see that, Sam? Not really an area inside of favorable large triggers. Those one-to-ones quit printing. These one-to-ones are in the moment indicator. When they stop printing, they no longer exist. So you got in at the triggers, but not at an area. Rule number 3 could have kept you out of this one, recognizing the loss of momentum. It was, and Sam, those one-to-ones, they're in the moment. One-to-ones will print. Let's find it on a big chart. This market is all over the place. One-to-ones will print until they're no longer relevant. So you see that they're still there, and at this point, that one-to-one is no longer relevant. So if you see that on an entry chart, if they go away, and it's not there anymore, cool. And that's a great lesson there, isn't it? Like, that's pretty cool that we can go ahead and post a picture and just learn from it. And that's all we can do, is post pictures and learn, right? Post pictures and learn. And the more pictures you post, the more you get to learn. Yeah, don't ever be shy about posting. Every time you take a trade. But remember, write your rules. What are your rules? And you're doing a great job of that. This is what I see. Guys, sometimes you may see it a little mistaken. We'll talk about that. Earl, let's see what you're doing, my friend. Earl, getting on that momentum train, right? Everything says down. You're starting to clear the areas. Trading into one-to-ones is rarely as advantageous as trading from the other side of one-to-ones. Takes a little bit of patience. Momentum, quick profits. Nice job, Earl. Ron, do you see what you've started? I love it. There it is again, Racha. We saw that one earlier. Good job. Scrolling. New trader. There is no pullback, but a strong trend. Do we enter the trade? New trader, did you do this on purpose just so I could say it? Are you ready? There's only 2 options, ladies and gentlemen. Only 2 options. Rules met, rules not met. That's it. I don't care about opinions. I don't care about what you want to have happen. Doesn't matter. New trader, are your rules met for a trade when there is no pullback to an area inside of favorable large triggers, no matter what the momentum and the clear path tells you? There's no trade if you're a high probability trend trader. The rules are not met, right? What's the flip side of that? When you learn to read your indicators, when you understand what you're seeing in the moment, well, there may be a trade. But right now, all you're doing is you're saying, I'm waiting to understand the best of the best entry because the best of the best entry provides me all these advantages as a new user. It's going to keep me on the right side of things. It's going to keep me from trading into things. It's going to give me the confidence to move forward and develop a plan on my own. Rules not met, no trade. It's almost always that simple. The hardest thing about being a day trader, guys, I had a picture of it. The hardest thing about being a day trader is doing absolutely nothing when your rules say that there's nothing to do. And Ron has started a cult. Yep. And Paul, you're getting bored because there hasn't been anything to do for a while. Nice job. Because that means that you're following rules, doesn't it? It means that you're waiting for your rules to be met before you enter a trade. What's the crude oil doing? Termination condition. My large triggers are still red, right? My momentum indicator, my small triggers are still below resistance. Too soon for a trade. I don't have the rules met, no matter what opinions I have. I can't have odds favorable momentum if my small triggers are up and my large triggers are down, right? It's a conflicting view. Can we make an if-then scenario? If these triggers roll, if these smalls get above resistance, well, then I'll look for an area of support inside of favorable large triggers. And if you tried to beat the gun, you just got stopped out with aggression, didn't you? If you said, well, it's close enough, I'll get in at support at conflicting triggers, they just stomped you. And the small triggers have remained below resistance still. We still don't have the advantage of a clear path. Are you guys with me on this? Do you see it? Do you see this fight between deep pockets? And do you notice how that fight's happening between resistance and support? Nexgen users, you have the advantage of rules. You have the advantage of a methodology that's been proven to win more than it loses. All you have to do is study it and believe it. Termination conditions for the win, right, Jason? Termination conditions for the win, even if it's a win in the moment. So me, being one of those guys that hates to give away advantages, this is where I can say resistance keeps holding, support's holding. Are you ready? Until one of these areas breaks with conviction. I'm not going to guess. Guys, the most expensive thing that I own is my opinion, because it costs me money every time it comes out. Does that make sense? And that's crude oil inventories. And let's see what I saw. Hey, Mike, do me a favor. If you put in a prediction or a trade, just show us the picture. Let these guys learn from it, right? Educational room. Termination conditions. Gary, great read. Termination conditions, nothing to do, right? Just patience. Just waiting. Waiting for an advantage. If this area is really going to hold, these triggers are going to roll, right? But aren't large triggers down and below the area? Large triggers are down below the area. Large triggers are down below the area. There's a big difference between an area that's broken, has the potential to break, or an area that's held and has the potential to hold. Does that make sense? Thank you, Mike. I always feel like a jerk when I say stuff like that, but it's important that there's some value in every post, right? And look at that, guys. Even with the green background, termination conditions for the wind. If this area is really going to hold, these triggers are going to roll. I know. I certainly do, but the other 57 people in the room don't. And if you say long S&P, they don't have any rules met. And they're going to say, well, shoot, there was a blue line. I guess that means go long, right? And they're going to be committing financial suicide at every turn of the corner because they don't have the 10 years that you have. Trader's Room, Mike, it's perfect for stuff like that. Guys, the difference between an area with the potential to hold and an area that's held. I'm looking for the picture right now. Is it, Chris? Did we get a full reversal? Not yet, right? So it's not a good bottom. It has the potential to be a good bottom, right? It has the potential to be an area that reverses the market, but until my trigger lines roll, well, it's just a blue fib that's causing a bounce. And guys, here's a picture that I have. This is might versus has. I love this picture because it reminds us that if a top is really going to be a top, the triggers are going to roll. If a bottom's really going to be a bottom, the triggers are going to roll. And the reason that we talk about this, if the mid-band is in the large trigger, whether it's large or synth, can you take a trade? I don't know. Safia, do you have favorable large triggers, meaning that they're overlapping one on top of the other? And the real answer is you can do whatever you want, but you have to write a plan for it. Do you have odds favorable momentum, Safia? It's rules met. There's nothing in that midband. This is the large or the live S&P. Are there any large triggers anywhere near the midband? No, there's no trade there. Not a high probability trend trade. Exactly. So guys, might versus has. Absolutely. Man, I take a lot of pictures, don't I? This is resistance, guys. This was a termination condition. This is an area that had the potential to stop the market. All of my triggers are green coming into this red line, just like we saw down here. All my triggers are red going into the blue line. It has an area that has the potential to hold. I think resistance will hold. I think support will hold. But if support's honest to goodness going to hold, the triggers are going to roll, whether it's an 8 range, a 5-1. And I want you to look at the prices. This price, where I formed the opinion that resistance may hold, is the exact same price when my trigger lines tell me that it has. Does that make sense? This is where new users get chewed up because they want to be first. I think it will hold. It is held. I'm getting my butt kicked 32 days to Sunday because of my opinion. I think it'll hold. Never got a full reversal, did we? Do you see it? Never got a full reversal. Never got the triggers to roll. Give me a Y in the room if you see it, guys. And now we're back into a divergence low, aren't we? Now we have price reaches a divergence low. All of my trigger lines remain above. Now I have a pivot stop out at fibs. But I still don't have triggers that have rolled. Be patient, guys. You don't have to be first. You can have the advantage of momentum. You can have the advantage of a clear path, right? You don't have to be first. Guys, do you remember that picture that I posted, let it break with conviction? A 50-50 trade after consolidation is not conviction. This is an area with the potential to break. This is a 50-50 trade, right? Area with the potential but hasn't broken. No divergence. If you took this trade, this is a trade, if it wins, it typically wins big. If this trade wins, this trade typically runs forever. But when a market's been consolidating between two Fibonacci areas, and I get a no conviction 50-50, might break, might not break, who knows? It's less likely to win. And guys, you can make $500 per contract per day with everything going your way. It's like going to the candy store. It's like going to the ATM. Does that make sense? 50-50s after consolidation. You accept the risk going into those. You say this one probably is going to lose more than it wins, but if it wins, it's probably going to be amazing. Paul's making predictions. He says the ES is close to a breakout, which means Paul says that all of his trigger lines get below this area of support. Remember when somebody made the opinion, I'm long on the S&P? That was calculated, right? And Chris, exactly, not a good bottom till it is. But now we have odds favorable. Sorry, Mike. Now we have no termination conditions. So now with all those bars going down, I'm going to go from my highest point of the trigger lines to the lowest point of the trigger lines. And then I'm going to squeeze that into a window of opportunity from the lowest point of resistance to the highest point of resistance. Do you see it? Do you see what we just did there? Rather than anticipating that an area may hold or break, we let it break. Rather than hoping for momentum, we identified odds favorable momentum. Rather than saying, I think it might go from here, we can say, well, this is the area inside of favorable large triggers where it's most likely to continue with momentum, with a clear path. Guys, give me a Y in the room if you're with me. Do you understand what just happened here? And this is a trade that when you follow the rules and have these advantages, typically wins 70 to 80% of the time. If a trade wins 70 to 80% of the time, guys, whoops, I didn't put stops and targets in. If a trade typically wins 70 to 80% of the time, how often is that trade obligated to lose? Why what, Cal? It is. That's why I sold the market, D. I have momentum. I had no termination conditions. I had an area for entry. And guys, this one may or may not work, but statistically, this is a trade that typically wins more than it loses. Statistically, this is a trade that gives me enough advantages that I'm willing to take it. Your typical stop on a futures trade is 12 to 14 ticks initially. Put outside of the window, beyond where the market shouldn't go. If a reversal bar prints, if this trade decides to be a winner, I'm not in control of that. If a reversal bar prints, meaning price comes down to this gold reversal bar, I can reduce my risk a couple ticks above the bar. Are you guys with me so far? I'm not identifying where the market's going to stop on a dime and turn. I'm creating a window of opportunity that gives me an advantage, that gives me the advantage of momentum, that gives me the advantage of an area likely to stop the market based on my study of termination conditions, that gives me the advantage of knowing where it's likely to continue, right? That gives me the advantage of identifying direction, of identifying momentum, and I can also read if in the event I get another slowdown, right? Maybe I get another divergence. Maybe I get another loss of momentum with the small triggers inside. Well, then I can make a management decision, or I can say, you know what, I'm just on simulator. All I'm doing is practicing entries. So I don't care if I win or lose. The only thing I'm concerned about is whether or not I'm taking the correct trade, whether or not I'm entering at the correct spot. I can identify areas likely to stop. I can identify momentum. I can identify where the market is likely to go based on Fibonacci. And guys, that's all we're doing for the first 30 days. All we're doing is just identifying advantages and trying to get that best of the best entry. Trying to get that perfect entry that continues our advantages. Cal, I got you. I'm going to teach class. When I take a break, I'll email it or at the end of class. Trying to determine where are my advantages? Where's the market likely to continue? Where's the market likely to go? Do I have the advantages to support it? Guys, this trade's already gone up over $100, right? You may say, well, when I make $100, I'm going to go break even. Absolutely no risk on it. So you may say, if things decide to change direction on me, I've got no risk. I've got money in the bank. If you're brand new, give me a Y in the room if you see what's happening right now. Advantage of momentum. The advantage of no termination conditions and the advantage of entering the area where the market is likely to continue. Safia, my entry was very much inside of those favorable large triggers, weren't they? And my initial stop is going to be 12 to 14 ticks on a futures trade. Because even though this is where the market is most likely to continue, it's not 100% spot on, right? It may pull up to that higher point. This is still an area likely to stop the market. With this many advantages, I'm very much willing to keep some risk on this trade. I can identify a divergence low as a trouble spot, right? If divergence prints, maybe I make a decision, or maybe I trust momentum and direction coming from an area, and I keep a profit target down there at that next Fibonacci area. Guys, this is what we're doing every day. Your job is to nail the entries. Management will come along, won't it? Eventually, you'll be able to manage these trades wonderfully. What's $200? 96 would have been $200 profit if I had a target there. Do I still have the advantage of momentum? I do on a 13.2. Do I still have the advantage of a clear path? I still do on the 13.2. And now, guys, look at this. Larger down, smaller down, larger down, smaller down, smaller down. Do I have anything on God's green earth that suggests this isn't a trade that I should be happy to be in? That's chart reading, guys. All we've done is read our charts. All we've done is gauge the advantages based on a little bit of chart reading. We made an educated guess based on a methodology that typically wins more than it loses. And because the conditions for entry have been met, it took a trade, put a stop where the market shouldn't go, and made some money. If Mark can do it, I can too. Absolutely. Guys, Mark is not the sharpest tool in the shed. It made a $200 profit, but look what we have now. Now I have one loss of momentum, and I have a second loss of momentum, right? Maybe I don't want to risk any money, but I'm willing to stay break even because I've already taken a winner. My smalls are down, my large are down, my synthetic are down. My momentum is down, my areas are down, my trend is down, my large are down. And I know that 3 divergences in the same location means that the trend has the potential to end, right? But 2 divergences with the small triggers pointing down rather than up, I don't know. Let's see if the momentum on the 13.2 carries us, or if we get another indication that this may be over before the area is reached. Paul, did I talk through that well for you? Maybe I'll say, I'll cover my commissions. But Paul, if you didn't get this entry, isn't that just a second chance to do great things? And there goes the momentum, right? Guys, 96 represents $200 profit. They were inside, but what direction were they pointed, Paul? Big difference, right? Guys, do you hear how calm I am? Do you know why? Because I believe in the plan, because I've done the study, because I've taken the time to understand when the advantages are present, and I've taken the time to understand when they're not. And that's fine, Stephen. If that's not your trade, no worries. It doesn't have to be, does it? Absolutely, Paul. There's a reason I talked through that. It doesn't have to be your trade, Stephen. It doesn't have to be anybody's trade. But time and repetition. The more times you do something, the more clearly it becomes. Guys, look at this. If divergence prints, I'll know by the third bar. 1, 2. This is my reversal bar marker. This is the point where this bar becomes an up bar. 2 ticks beyond that is where this potential divergence, I'll know whether or not it's true. So now, guys, I can't do worse than 2 points on this trade. If I'm taking a conservative approach, I've already made 300 on a 2 lot, right? Guys, I hope new users are using this too, because it happens every day. You know when you have a sibling and you don't realize how smart they are? Guys, that's what we call bingo.
Order canceled.
Ta-da! Welcome to Nexgen, ladies and gentlemen. This is what we do. Sam, why did it make it to the fib? Odds favorable momentum. That's what leads the way, guys. So Jim, Fibonacci support, right? Why not use those fibs? I use these fibs to determine that this was an area likely to stop the market. I use this fib to determine that it's an area where it's likely to continue. Why not use this fib or this 1-to-1 for a potential target? So what you have, this right here, Jim boy, this is what you call a reversal bar marker. And this is the same thing up here. This white one is actually pulled from a different. This is the price, $39.99. If this bar goes up and reaches $39.99, I'll have one of these green reversal bars. If this bar goes up to $95.25 on my 5-1 chart, well, then I'll have a reversal bar. And let's see, maybe it's going to happen for us. Maybe it won't. There's still a lot of momentum to the downside, right? Does that help, Jim boy? And welcome. It's great to have you here. So ladies and gentlemen, brand new users, demos. Well, Jim, now you know where low has the potential to be, don't you? The same way we knew where high had the potential to be. Guys, this is the amazing part of Fibonacci. Is we can identify where the market is likely to stop, where it's likely to go, where it's likely to continue. And then Jim boy, John just gave you a link to all the indicators for you guys that like to know why. And here's the question for you. If your rules were met, if you took your entry and you took profits at Fibonacci support and you made $300 on this trade, do you care if it goes beyond it a little bit? Because if you make $300 twice a day, that's a $3,000 week, guys. That's a $12,000 month. That's $122,000 or $144,000 a year on a one lot. What happens when you double that? And Jim Boy, they're trying, aren't they? They're trying to get to that gold bar to give us. No problem. Joel, take care. Stephen F., I don't believe that there are reversal bar indicators on NinjaTrader 8. One of the things that a lot of people are doing in Apex, Stephen, is using NinjaTrader 7 for their analysis and using one single chart on NinjaTrader 8 for their Apex executions. And I think Jason may have a template for it. But when I've built mine, I literally have my 13.2 like this. I have my 5.1 right next to it. And then I have my NinjaTrader 8 5.1 right here. And I'm using all the information from these two charts and I'm executing on that NinjaTrader 8 with no tick data, no synthetics. So I can see my reversal bars on my NinjaTrader 7. Guys, I'm going to take just a minute. Okay, I'm going to go reload. Oh, thanks. Nexgen Ben put in. These are Ben's two trades for the day. Momentum to the target, trend trade to the target. Two trade, $1,000 per contract and done. But Steven, do you see NinjaTrader 7, 7, 7, execution on 8. Awesome. Nice. Ron, have a great day. 74 and sunny. Can you guys see that? 31, snowing now. It's a little different. I'm from Texas, though. It's a novelty when I get snow. It's pretty cool. I still like it a lot. Then, Paul, we saw this one, right? Making money because you trade with momentum, because you trade with direction, because you trade from areas. Love it when that happens. And there we go. That reversal bar marker a little bit for those of you that are wondering. Guys, let's see what these one-to-ones and support do with no trigger lines through. Let's take a look at that termination condition. I'll be back in just a minute, and we're going to finish strong. So new users, Mohammed, Cornelio, Spoonie, Be Loyal, Christina, anybody that's brand new, my gyms. If you have a question, I want you to ask a question. Let's dedicate this last 30 minutes to you guys and making sure that you get what you need, okay? I'll be back in just a minute, guys. Strong today. It's been a great day. I'm having a lot of fun. I hope you guys are too. I hope you're learning something. Nexgen Ben, -5 at your house this morning. Whoo! You know what? We are 31 and snowing, and it's absolutely beautiful. It's coming down strong here. It's a good snow. Um, my wife's going to drive in it for her first time. All right, Jim boy, what's wrong with this trade? So, Jim boy, every time you ask me a question like this, I'm going to default to rules, okay? I'm going to default to trying to keep it on a real basic, right? Um, so when we were looking at this scenario as it was unfolding, we said that this area this area has the potential to stop the market, right? This area had the potential. And Jim boy, are you with me? I want to make sure. And I love that everybody's jumping in. What you were looking at is you were looking at support with the potential to hold, right? So as that market was doing all this, we were actually having the conversation in the room that said, well, it has the potential to hold, but it hasn't held yet. Chris T said, hey, we've got a strong bottom, right? We've got a good bottom coming in place. And we said, well, those triggers haven't rolled yet. And if those triggers haven't rolled yet, well, then there's just no reason to go long. So the challenge with this trade, Jim boy, if we break it down, is your large triggers are still down, which means that you're not trading with momentum. And that's okay. You're going to understand momentum. When the smalls break away from the large, that's our best look. The triggers agree, the space between the two, everything's strong in the direction. At the time of your entry, your smalls are up, but your large are down, which means that you don't have the momentum to support the long. You're also not trading from areas. You're kind of jumping in and hoping that that market just continues. Rule number 3 with what we do in Nexgen gives you the ability to understand where the market is most likely to continue, and areas out in the middle of space are rarely that area. So, Jim boy, right now, it's what's wrong with this trade. The generic answer, and really the pain in your butt answer that I'm not going to give you, is that you didn't follow rules. You didn't create advantage, or you didn't recognize advantages putting you in a position where this becomes a scenario that wins more than it loses. And sometimes the market doesn't give a statistical advantage. Sometimes our rules aren't met. And when our rules aren't met, no matter how much we feel like we missed out on, it's typically better. Being flat doesn't cost a penny. So does that help a little bit, Jim boy? Giving you an idea? The difference between an area that has held, new trader, take care, and an area with the potential to hold versus an area that has held. A trade with momentum, a trade without momentum. So the 5-1, Jim boy, I love that you said that. Because then this gets us to the root of the problem, right? All of your information to take a trade comes from this higher time frame, from that 13-2 chart. That 13-2 chart is going to tell you if you have the momentum that you need through strong triggers. That 13-2 chart is going to tell you if you have a clear path to your potential target. And rules 1 and 2 work together. Your 5-1 chart is a smaller, faster chart. Your 5-1 chart, let me find my picture here real quick. I've got a bajillion pictures. Your 5-1 chart is where you're going to refine that broad stroke of a brush. So when the 13-2 says that you have momentum, when the 13-2 says that there's nothing in the way, see how on just one bar, that same box comes up? Is all of these bars on the 5-1. So it's a refinement chart. It's only an entry chart, and we're not worried about the strength of the candles. We're not worried about anything other than being able to take all of these advantages and whittle them down into a very simple spot for continuation, an area of support or resistance inside of favorable large triggers. Sometimes we don't have the advantage of momentum, and even if the 5-1 looks pretty, it's not a rules-based trade. And we've got a lot of pictures here. When the rules are met, we'll use that smaller, faster chart for refinement, just looking for that entry, getting us in at the best of the best spot where the market's likely to continue. And this is a process that you're going to be able to practice and repeat over and over again until you become very comfortable identifying those advantages. The advantage of momentum, having not reached a key area yet with all that momentum, and then looking for that tiny little pullback right to an area inside of those favorable large triggers to get your continuation of that move that's already been established. Does that make sense? And that was the perfect question. And oh, absolutely. And feel free to write on your charts. Like if you're looking, well, I saw this, write it on the chart. Yeah. And Jim Boy, 15 hours every week. We're here live to give you this kind of feedback to help you get to where you need to be. John Novak posted in the room, always a treat. And he came through too. And guys, this is a common mistake for new users. He's starting a folder with these common mistakes. This is just an area and it's not always a trade, right? Just because you see something doesn't mean that there's a trade. A common mistake traders make is thinking fibs may hold and going long against a lot of trigger line momentum. It's best to wait for them to break and go short or for the triggers to roll first before going long. Trying to get lucky against the trend is a very common mistake. Thanks for that picture, John. That's a good one. And guys, we're creating a folder right now of common mistakes. We're creating a digest, if you will, of the common mistakes that people make. Indu, let me see what you had here. It looks like I don't see a 13-2 chart. I see a range chart. And actually, that's probably a 13-2, isn't it? So Indu, you let the area break. You got odds favorable momentum. You took a pullback. And then you exited a little bit before that support. Great trade, Indu. I think we took the exact same one live in class. And then Gary sharing, for those of you that are Apex traders, how he has his set up. Thank you for sharing that. And then Paul, let's see what happened here. Down, weakening of the triggers. Smalls are still outside, so you take the perfect entry, right? At the area, inside of favorable large triggers. Great entries create manageable trades. Great entries create manageable trades. Quick profits, break even, still outside. Nice trade, Paul. Notice Paul's already got $100 in the bank on this trade, and he can't do worse than $12.50. So it either hits his target or it doesn't. He's not worried because he's trading with advantages. I love it. Guys, this is it every day. And then, Paul, do you see the difference? 2 divergences, 3 divergences, but those trigger lines are kind of pointing up, not down. Kind of changes the scenario a little bit. Guys, all it is repetition. All you have to do is practice. And check this one out, guys. We're losing momentum, right? Small triggers have returned to the large. They're not inside yet. And Sam, it would be nice if I just won the lottery, but since I didn't, I'm going to have to do some work, right? But the thing is Sam, do you really need Do you need an alert to tell you that this price bar is moving? If everything is going down and it starts to go up, can't you see it right here? So all you're staring at, Sam, is do I have odds favorable momentum? That's it. And then it goes to the 5-1 chart, right? Losing momentum on the 13-2, losing momentum on the 5-1. Look at where those small triggers are, guys. Inside of those large triggers. Loss of momentum, loss of momentum. Are you willing to give away that advantage? If you were, you might have been stopped out right here. And if you kept your stop at 12 to 14 ticks, well, this third higher divergence said, seriously, Mark, we're losing momentum. Give it a break. Wait for things to change. Wait for things to roll. Wait till you have that advantage again. And that advantage is going to come. Maybe these small triggers get below the large triggers, right? Look at this. One is up, one is down. One is up, one is down. Guys, which direction is this market going? Hell, I don't know. Unknown. So if you can't determine through your indicators what direction the market's going, is there any reason to try to take a trade? I don't think so. I like advantages, guys. Before I try to kiss that girl on the second date, I need one of her friends to tell me that she likes me. I like advantages. That's that one thing that everybody can identify with, right? Is that awkward first kiss. How many times do we skip it because we're just not sure? Your rules make you sure, guys. Christina, how we doing up there in Canada? You feeling all right? First day, it's a lot of information. It's like drinking from a fire hose. But every day, a little more clarity. Every day, a little more understanding. Do we have odds favorable momentum, guys? Awesome. Slowing down a lot. Smalls are inside the large. It's slowing down a lot, isn't it? Isn't it possible? I don't know. Based on a loss of momentum, and a loss of momentum, maybe the market may push a little bit higher. It could happen, right? I'm giving away the advantage of momentum. Jim, how are you doing? Who else do I have new in here? Talk to me, guys. Spoonie, you still with me? Josh S., I know you're not new, but how we doing? NG, how we doing? Paul, how we doing? Tricky, how we doing? 000, it's great to see you still here. How are you doing? CJ, second week. You're like old hat, right? Guys, we got a few minutes. Is there something that I can help you with? You're struggling with reading your 13-2 triggers when approaching fibs, I'm assuming? You want to make it easy, Josh? You want to take all the guesswork out of your life? Let's just scroll back. All right, Josh, we're going up. 13-2, right? There it goes. There it goes. There it goes. All right, Josh. Price reaches resistance, right? Are the triggers above or below? Boom. Are you going long into that area right now? Or is it a termination condition? Josh, you know exactly what you're looking for, but you're overthinking it, right? Price is coming down. It reached support. Where are the trigger lines, Josh? Above or below? Above. You're not going short. I mean, with those trigger lines, you're definitely not going short, but it's really that simple, guys. Price reaches an area of support. Where are the trigger lines? If they're all above, it may stop the market. It's not guaranteed, but it may. Support, triggers above. No momentum, but now we're starting to gauge momentum, right? Price comes down, hits that termination condition, that potential termination condition. All the trigger lines are above. Josh, you just don't have an advantage here. You don't have a clear path. All right, now the small triggers broke through that lowest point of support. Now you can start saying, Josh, well, these areas have the potential to break, but they haven't broken. Maybe if I get a picture perfect, no divergence, small window of opportunity, everything's rock star, maybe I'll take a shot at a short on an area with the potential to break. Are you with me? Now all the triggers are through. These areas are broken. Josh, if you get a pullback to an area inside of favorable large triggers, you better be in that trade, my friend, because the areas are broken. This one? Absolutely I do. Nope. It stopped printing because the triggers got by it. Until my large triggers get to the other side of it, it's no different than any of these fibs. It broke, Josh, because the software got enough information to say it's not a threat anymore. The divergences won't last forever. See how that magenta high is still extending? It's still a threat. This one has had the conditions met that the software says, done. Price has fully exceeded it. But the trigger lines lead the way. And then the market trends down, and now we're losing momentum, right? Now we've lost momentum into an area of support. Termination condition. What has to happen? Well, my trigger lines have to break. They didn't yet. Oh, they broke. The area is broken. The smalls are below the large. And guys, that's where we went short. We let it break. We had momentum. And we know what this did, right? Right to the target. So Josh, take the pressure out. It's either broken or it's not initially, or it has the potential, right? And when the area breaks, we have a clear path. What did this one look like? I have the advantage of a clear path, one line outside. I get a pullback to resistance inside of favorable large triggers from 39.93.50 to 89 or to 39.90. Guys, that's 3 points. Is there any reason I can't grab 100, 150 bucks in there, go break even when that next divergence prints, get out when the next divergence prints, break even? My small issue are these divergences, but I have momentum and a clear path in an area likely to hold. It was, wasn't it? Oh no, it was outside. You're right. Good eye. I didn't even notice that. So there you go. Rules not met, right, Josh? Thank you for getting that. Sometimes I need you guys to keep me in check. Good job. Everything that you do is a process of reading your charts. Everything you do is dissecting. Do I see momentum? If I do, well, now I got to look for termination conditions. If I don't see any termination conditions, well, then I have what I need to take a trade. And guys, do you know what the truth of the matter is? When this market is cranking down and there's absolutely nothing in the way, when you get so good at entries, this may become a trade for you. This may be just a trend trade short in a strong trending market, but not for the new users. Absolutely. So Josh, when I'm looking at it, I'm looking at price reaches the bar, reaches the area. So price reached the one-to-ones, right? You're in at 84 and not -5. If no areas go through that one-to-one, then Josh, I've lost the advantage, right? I've lost the advantage of a clear path. If you took this trade, look at where your large triggers are, all the way down here. Is that favorable large triggers. Do you guys remember the picture? What do favorable large triggers look like? One on top of the other, guys. Tiny window of opportunity. What do they look like here? There's a mid-band in these triggers, and if these are coming up, there's going to be a fib in these triggers. Which one's it going to hit going into a termination condition? From a pivot that's not from a key area. It's not even a termination condition that creates the reversal. Guys, this is a pivot from beyond the area that pulls back to maybe resistance in a mid-band and then continues to move to the next Fibonacci area. If patterns repeat themselves, and we probably won't be here for it if it happens, but if patterns repeat themselves, well then guys, there's potential that this pivot not from a key area directly into a termination condition with large triggers that aren't following might continue the move down to that next key Fibonacci area. This is enough to make me feel like this long from a mid-band and split triggers isn't advantageous. And let's see what happens. Claire, let's see what you did. Because these fibs, Claire, are from synthetic time frames. This is your 13.2, and I'll show you. I'm getting to the point to where I have pictures for everything. What are your Fibonacci levels? This is from the creator himself. On your 13.2, the skinny ones belong to the 5.1. It's a synthetic fib, so you can recognize areas on the 5.1. This big fat one is from the 21 chart. And this one that extends all the way over, that's your 13.2 native, Claire. So what you're looking at is a 21 chart fib. And as far as why they stopped printing, you'd want to talk to John Novak about that. He programmed those bad boys. I can teach you how to recognize when they have the potential to hold, when they've broken. I can even help you find a great way to get into that market or critique yours. But that technical stuff, I'm going to defer to my big brother. So Paul, everything says down, clear path, smalls outside, pulls back to the area of resistance, right there at those favorable large triggers, a couple ticks above. Cal, take care. I'll email those checklists to you. And you say that you're going to get paid on the way down to that potential trouble spot. Paul, it's almost as though you have been practicing. Absolutely. Jim, an area that was acting as support when it's broken behaves as resistance. Fibonacci is unbelievable. And this isn't me trying to sell you software. This is me watching these stinking areas hold and create advantages every day of my life. And it's amazing. And it's an accumulation. When you open your software, it's measuring every pivot for 10 days back, right? I mean, it's measuring every pivot for 10 days back. It's creating synthetic time frames. It's projecting forward. It's going backwards. And it's weighing and sorting all of these different areas. I have a picture. Let me find it. Do you guys remember the video game Yar's Revenge? Is anyone old enough for that? Back in the early 80s, there was this game where you had to shoot your way through. But it had this force field, right? I'll show you. Guys, this is what your charts look like. Jim, this is what all of those projections and alternates, this is what all those Fibonacci levels look like when the software is doing it. It is thousands of potential areas. And then the software sorts and weighs. And it adds value and strength. And that's how we come up with these areas that you guys are using for targets, that you guys are using for entries. And and it helps. So Claire, if you get into a trade and you forget your ATM strategy, Jim, does that help a little bit? So it's a reflection of psychology, and when that psychology breaks, it kind of goes the other way. And Mike, I know you're old enough to remember Yar's Revenge. Someday you may learn you're slower than most. That's not true, Joel. Joel, everybody wants 20 years of knowledge, but they want it in the first week. Plain and simple. Allow yourself to be new. Allow yourself. And Joel, this works as well. Guys, if you've been trading Nexgen, if you've had it on the back burner for a couple years and you didn't really follow a plan, maybe you spent a couple years and you're like, oh, I'm going to be a day trader, darn it. And you never took the time to be a chart reader, well, then you probably struggled a little bit. Guys, look at that. Expectations. Always. If you refocus, and Joel, this is where you're at, my friend. If you refocus and start putting your expectations not to be a successful day trader, but to be a successful chart reader, it's going to change your world. Because what did we see here? Price reached an area and the large triggers remained a full bar away, right? Absolutely, Jim. Let yourself be new. Price smashed into an area of resistance, right? The large triggers didn't follow. Price accelerated away fast and far. And it hit Fibonacci resistance. It hit those one-to-ones. The large triggers remained a full bar away. And it closed the gap. Guys, this is the gap theory. This happens every day, dozens of times a day. This is the same concept, price closing the gap, that gives you amazing entries. If you've got the repetition in the study, guys, you recognize this pattern and you said, well, this long right here doesn't make sense because price is most likely going to go back and close that gap. And then taking it one step forward, I said that when this pivot doesn't come from a key area and it reaches that mid-band, it reaches that level of resistance, didn't we make this circle down here 15 minutes ago? Quite often, based on patterns, the market likes to finish the move to that next key area, especially in a strong downtrend. It likes to continue in the direction of the trend. Isn't this just a trend trade? We still have to wait for the advantages. But guys, it's the repetition. Allow yourself to be new. Just say to yourself, pardon my French, I don't know shit. I'm brand new. I don't understand all these concepts. They're new to me. So you have two choices. You can sit there and you can struggle in silence, or you can just ask a million questions. Guys, it's the million questions that give me job security. So my fingers are crossed that you'll take that route. When I was 24, 25, absolutely, anything can happen, Sophia. Perfect read. Not odds favorable, right? Anything can happen. And a termination condition. All sorts of stuff. Guys, when I was 25, I went to a mechanics institute in Phoenix. That's a perfect read. And if you've ever been to a trade school, not everybody has, they're full of convicts. It is, but Sophia, is the 5-1 where you're gauging momentum for entry, or is the 5-1 where you're gauging momentum for management? For management, right? So focus on the entries and you'll get there. Guys, I sat in a room full of convicts or ex-cons and ex-military and guys that were in on work release in this mechanics institute. And I was learning to work on motorcycles. I've been riding motorcycles forever and I really wanted to be a mechanic. The only problem was that I had absolutely no idea how engines worked. I didn't know the parts. I didn't know what went into it. Large triggers up, small triggers down, large above the area, small above the area, larger up, smaller down. It's an ugly look, guys. And I'm sitting in this theory class, and there's 50 guys in there. And the instructor says, hey, let's talk about camshafts. And everyone's like, yeah, let's talk about camshafts. And 25-year-old Mark had to raise his hand and say, hey, what's a camshaft? And the entire room burst into laughter. Ah, this Yahoo doesn't know what a camshaft is. Ha, 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 ha. Well, guys, I ended up graduating, and I ended up graduating top of my class, and I kept asking questions. And I used those instructors for the reason that I was paying for them, to give me the information that I needed to be successful at something that I wanted to be successful at. There are no silly questions. If you don't know the answer, then it's a very legitimate question. If I don't know the answer, well, I'm going to find somebody who does, and we're going to get you that answer. And I'm going to show you from the tutorial page where you can find most of your answers if you're not in class. You guys, the biggest commitment I need you to make is that you'll do the study, that you'll do the work, that you'll commit to looking for reasons to get in and get out and make that money. It did. I got you, Ben. Momentum style trade, which means aggressive entry, aggressive exit. $1,300 a day isn't a bad day, right? Jim, I tell stories. I'm a talker. 2K, not so bad. And guys, that's it for me. So allow yourself to be new. Give yourself a little bit of grace. We're going to talk about stuff every day in class. The more you participate, the more you'll get out of this class. I'm excited to teach it. I enjoy teaching it. I enjoy the time that we spend here. And it really does make me a better trader. Because what am I doing? I'm focusing on my rules every day, right? Every day. Oh, thank you, Claire. Thank you. All right, Claire, hypothetically. And guys, this is not a real trade. I have no ATM strategy. Oops. And I buy the market. Not a trade. Absolutely, Christina. Thanks for being here. So, Claire, if I bought, what's the opposite of a buy? A sell, right? So I'm going to right click and I'm going to sell limit 1 for a target. And then again, the opposite of a buy is a sell. So I'm going to sell stop 1. And I'm going to put it where the market shouldn't go. Does that make sense, Claire? So I've put them in manually. The only thing to remember is that if your target is hit, if your stop is hit, you have to cancel out the other side. So Jim, you're welcome, Claire. Practice it a couple times. In Discord, there's another room, and it's the trader chat room. And I love it for you guys to see these. You're welcome, Claire. This is what other people are doing with the software. These are what people that have been here for a while. This is a place where if you're looking for answers outside of the basic educational process, if you want to show off trades that you're doing, if you want to discuss different looks, different scenarios, guys, this trader's nobody in here is going to trade live for you. I mean, they're probably trading live where you can't see it. Real money, absolutely. These are professional day traders using Nexgen software. There is nobody in this chat room, there is nobody associated with Nexgen that is going to tell you to take a trade or trade live for you. If you see it, then we're doing it from an educational standpoint, talking about what the indicators are saying. I don't trade my live accounts in front of you guys because you can't learn anything from what I'm doing because you're not where I am, right? You can't watch John Novak trade and expect to understand it completely. You can't. Same with Mike. Any of these guys. Everybody's worked hard to create their plan. And you'll get this more and more. Well, you'll be like, okay, that makes sense now. How could I possibly take a trade that somebody with 20 years experience is taking and seeing these indicators and interpreting them differently? So focus on you and focus on your plan. But what you can do is you can look at this picture where John says, can we review termination conditions one more time? Price reaches resistance and all the trigger lines are below no matter what chart it is. Look at that. But you can see how these guys are taking what they've learned, what they've created, and how they develop plans based on it. And it's pretty awesome. Yeah, and that's the room right there that Elvis is telling you. In the traders chat, when I log off and it's not the educational room anymore, guys, feel free to take the party over to the main room. Mike did that. He posted a trade in there. Mike says, oh my gosh, here I am, age 3, making money. Mike comes through with some of the best pictures. And it really is a community, guys. Everybody here is dedicated to your success. Whether it's the people teaching you, and honestly, the people that are trading it, these people are excited to share their knowledge with you. They're excited to talk to you about it, but all of them are going to have the expectations that you do your work, that you create your plan. And on that soapbox, 10 minutes over the hour, I'm going to call it a day, guys. You guys enjoy. I'm going to go watch the live market. I'm going to go look for advantages. Absolutely, Mike. Make rules, take pictures. I'll see you guys at 9 a.m. tomorrow morning. We're going to do this again. We're going to talk about rules so my new users get that repetition. We're going to focus on charts so my simulation traders get all the feedback that they need. And we're going to open that room to questions to each and every one of you so that you can get exactly where you said it was you wanted to be. A professional chart reader, right? Nobody said day trader. Guys, I'll see you in the morning. Thanks for being here today.